We are live. Thank you, everybody, for being here. We've got a lot to talk about. Bunch of different headlines that have just broke over the past 20 minutes. We got some updates from what Trump said around Iran in the cabinet meeting that we saw a bit earlier during the day. And we've got a lot of earnings. We got lots of earnings, like a lot of them, and some very important earnings, to be honest. I mean, these importance that we have coming up are going to be the ones that we got to really take a look at in the software and semi space. So we'll be going through all those earnings, see what we've got. But we also have a lot of headlines that we're going to get into. Here we go. This one is kind of crazy to start off the show with. Meta finally getting some love after basically earnings April 29th. So it's been about a month since we got some of these market participants to be excited about Meta. 630, 650. When I tell you the reason for why Meta's pumping today, it's honestly such a desperate reason. And it doesn't make me that much more, like, I'm pretty confident in Meta's valuation. I think it'll do well over time, but like the reason for why it's pumping is so elementary. But a pump is a pump. A pump is a pump. So that's all that matters. Meta is going to roll out subscriptions. Meta is expanding paid subscriptions globally across Instagram, Facebook, and WhatsApp. Consumer plans are expected to start around $2 to $3 next month. And Meta is also testing AI subscription tiers at $7.99 and $19.99 per month, with the higher tier offering more capacity for complex prompts, deep reasoning, and increased image and video generation. So basically, they're saying, yeah, we are going to monetize AI outside of just advertising with subscriptions. It's not Meta Compute. It's not some new mechanism for Meta to be able to, generate super intelligence or anything like that. But theoretically, people should be willing to, if people are willing to pay $20 a month for ChatGPT and Claude and all this stuff, maybe people are willing to pay more for AI-enabled subscriptions. I don't know exactly what would be the core catalyst for why people pay for these Meta subscriptions. They're probably gonna have to do a lot more work to explain why that's important. But the streets, honestly, I think so desperate to be excited about Meta for whatever reason that they can. And that reason ended up being today's subscriptions, which is some different form of revenue stream than what we've seen in the past for Meta. It does make sense to me, like they should be doing this. And there's probably, they have 4 billion people. When you talk about distribution for people that are willing to pay subscriptions, they have access to all the consumers, they have access to all the users, they have access to all the creators. It's just gonna be a question of what specific features and modules can they impose to get more people to be excited about it. And, if they do a good job on that, maybe that's another revenue stream for Meta outside of advertising. 635.25. Let's see if we can close above 630, not just for today, because we'll probably close above today, but for the rest of the week. And if so, maybe we can make our way back up to the 650s. Robinhood, that's up 2.96%. Robinhood says one thing about AI, and the sell side comes out and says, hey, we like the stock again. Goldman Sachs, $94 price target. They are impressed by the agentic offering on brokerage and credit card. While agentic trading is in beta and will only support equities at first, Hood plans to add agentic trading for other products. Finally, Hood indicated that it plans to roll out additional AI-powered products for investors along with the credit card. In our view, this is an early effort at embedding agents into key components of financial services. So you've got the sell side a little bit more excited about Robinhood after they announced their AI updates, and that's why I think that stock today is up 2.6%. The semi-trade, what happened throughout the day? Well, Micron continues to be pretty damn bullish. I know it's down from 985, fell below 900, but it's likely going to close above 900 in the next 10 minutes. 924, that's up 3.23%. on the day. Tons of option flow still coming in. Micron is still the 13th largest company in the world, still holding that $1 trillion market cap. AMD was not able to recover above 500, still 497, but very close to 500, which is not too bad. NVIDIA fell all the way to 208, and you're getting a little bit of rebound throughout the end of the day. This is kind of the classic setup we've seen for a lot of these semi stocks that get hit during the day, kind of recover towards the end of the day, and then they close slightly red to flat, still be down 1% of the day, but 212.64. Not too bad for NVIDIA. Space names keep doing well. Rocket Lab fell from 150 to 137, right back up to 150. ASTS fell to 118. ASTS just hit 131, now at 129, which was a new all-time high for ASTS. So the space trade continues to be on track as the market continues to like it. Lunar, which fell 14% yesterday after hours, is back up, making up pretty much all of those losses, $40.19. That's up 15% on the day. Your Qualcomms of the world, still down 3%. Your ASMLs, your TSMs, your GE Veranovas, Nokias, Blackberries, Navitases, all down about 5 to 7%. They've all had a massive run over the past couple of days, so not that crazy to see them take a breather. But I don't know if that breather is necessarily specific to the semis trade. given your Microns of the world are still having a pretty good day. Reddit did get to 158, now at 155, still a 7% day, which is not too bad. Shopify got up to 108, now at 106. That's still up 1.79% of the day. ServiceNow as well got a little bit of green at 102.75, down from 105. But overall, the actual momentum around the AI trade in the context of semis is not that easily going to one direction or not. And, hopefully we're going to see some more of these names continue to hit their green. The earnings after the bell, they're going to be really important. You got Salesforce, you've got Marvell, and you've got Snowflake. I'm going to do a poll right here in the chat on seeing which one people think can outperform. I ran also massive day. This thing almost got up to $70. It got very, very close at 68.13. Right now it's 67. Hopefully we get a close above 65. Again, I think the street was impressed by their Dell deal last night. So that one got a rebound. CoreWeave and Nebius didn't really get the same type of love today. CoreWeave, yeah, red. But again, it wasn't as red as it was in the day. And the Nebius tools, even Nebius, dude. Nebius is down 5 cents on the day. I mean, what a freaking resilient stock right here as that one continues to hold on to its strength. All right, so let's see which one people own. I think Salesforce and Marvell are the most owned here in the chat. You got Marvell, Salesforce, Snowflake. Which one outperforms? I don't have exposure to any of these. I mean, if you're playing momentum, it's Marvell. I would imagine they're going to continue to crush. I also like that Marvell went from 220 to 199 today because now, it's not literally trading at all-time highs, which means there might be a good setup. Salesforce, I think, will have amazing numbers. I'm just kind of afraid that they have a ServiceNow type of quarter where they report and then the quarter is just not as interesting. Just like ServiceNow, even though ServiceNow had a good quarter. HP, we also have those earnings today. That's up 4%, and the street kind of sells it off. So that's going to be a very interesting one to see. You have Marvell, and then you have Snowflake as well, which maybe pulls a Datadog from last week, which ended up also not doing too bad. ServiceNow, where is that? That's at 102 right here. Yeah, 102.60 on ServiceNow. So again, if you're just joining, the big meta deal was that they're launching subscriptions, and the street is bullish enough to assume those subscriptions are going to do well. And that's why you got that stock at least hitting some green. Here's what Trump had to say about the sanctions. So before I left and the market open, there was a PBS report citing that Trump essentially said he was not going to be removing sanctions even if the Iranians gave us all their uranium, which confused a lot of people because if they're giving us their uranium, what are they getting in return? And Trump kind of clarified, but not really today. Here's what he had to say during the cabinet meeting.
Easing sanctions on Iran to allow Iran to sell its crude to market.
No, we're not talking about any easing of sanctions or giving money. No sanctions, no money, no nothing. We have control of money that they claim is theirs. We'll keep control of that money. When they behave properly and when they do what's right, we'll let them have their money. But right now, we're not doing that. And it's one thing is not contingent on the other.
Mr. President, on the shooting last weekend, it came barely a month after the third.
That's what he said. That's basically what you got from Mr. Donnie T. One thing is not contingent on the other. We're not talking about easing sanctions. So that quote that he gave to the PBS reporter was correct. I imagine that the Iranians aren't going to be happy about that because, they still have control over the Strait of Hormuz, even with the blockade, and they would probably want some sanctions relief. So I imagine they're still in negotiations, and eventually we're going to get some more details on how this is going to play out. Oil stayed flat today. It's still below 90, right? We are 89.37. Yeah, so still down 5% of the day. Market didn't interpret that news as necessarily being bad. Wow, Rocket Lab's going to close over 150, folks. We got 5 minutes. I mean, technically it might not, but 5 minutes. Yes, Rocket Lab does have $210 covered calls. Now I was looking at the option chain today as well. The 200 strikes are opening up. So people are willing to buy them. Rumble's up 9%. The CEO said we are going to be competing with the hyperscalers to provide best-in-class AI compute. I don't know what that means, but I imagine people are buying it to speculate on a potential deal that will be happening soon. And if that deal does come, then, maybe Rumble turns into an AI play. Redwire, that's up 9.3% of the day. Zeta was green, 2050 in the morning. Now back down to 1941. Nokia down about 4%. Redcat up 9% on an upgrade. They got to $20. Mercado Libre, that was up 3%. You had insider buying in Mercado Libre, Nokia, Norwegian Cruise Lines, which because the price of oil is down, the cruise lines have had a great week. They're up 20% this week. Norwegian's up 6% today. And HIMS, which had someone buy 48,000 shares. Hims right there, 25.28. That is also up 6% on the day. So look, overall, relatively decent day. The semis took a bit of a breather outside of Micron, but you had, dare I say, some rotation into a couple other sectors. The question is going to be, can those names actually hold on to their green even with the semis potentially coming back, which, you know, there is plenty of indication that those names could get bid up again. AppLovin, also a great day, 10%. AppLovin, Reddit, Shopify, ServiceNow, a bunch of these different names. Not a horrible day for software. Palantir didn't have that great of a day. Palantir, basically still stuck 2.84% down. And then Salesforce right here, down 1% going into the print. Okay, what did you guys say on the poll? 62% of you say Marvell outperforms. 22% say Salesforce, 16% say Snowflake. Put in the chat if you own any of these. Just put the ticker. And let's see. I would bet most people here own Marvell. I think Marvell will still be above Salesforce. Oh, we got some Fed quotes. Fed's Cook says the Fed is prepared to raise rates if disinflation fails to appear, but it would also be ready to cut rates if the labor market deteriorates. Wow. We can either raise them or lower them. Exceptional analysis by the Fed speakers. And look, the right course of action is to hold rates steady. Wow. This is like, they should have given a press conference at Madison Square Garden with this type of analysis here. These are really important things to consider. We should probably do nothing right now, but we could go up or we could go down. I mean, that's my job to say a stock could go up or down, okay? These guys are Fed presidents. They need to be a little bit more analytical, right? A little bit more. I see a lot of Marvells, but I see a decent chunk of Salesforces. I would say more Marvell than Salesforce. So it looks like Marvell's the main one that we're looking to pump here today, down about 4.6% going into the print. But I definitely see a ton of Salesforces here. And we're going to see what we get. What other earnings do we have? We have HPQ. Oh, we have Everpure, or that's what it's called, right? Everpure now? Yeah, they rebranded from Pure Storage to Everpure. So that's another AI adjacent name. We have Nutanix, which is it's a SaaS company. We'll put it on the list, but that is also technically AI adjacent to cloud computing. Nutanix right there, $12 billion company. AMSC. Why do I know this stock? AMSC. Oh, and Synopsys. Yeah. Oh, American Superconductor Corp. This one has been getting a bit more attention. Small company, $3 billion. Part of an AI trade, or has been part of the AI trade. And the other big one is Synopsys, which is software but chip design. Okay, so we got a lot of companies. We got a lot of companies to look at. Look at Iran, 67.94. Let's see if we can get that $68 close right there. Again, that Dell deal last night was pretty bullish. Right, Nebius going green right at the close. Reddit 154, Shopify 106. ASTS looks like it's going to get the 129 close. Will Rocket Lab get 150? Rocket Lab looks like it's going to get 150. And the S&P, which was red the majority of the day, is 14 cents away from going green. Even if we don't go green, still likely getting another 750 close. All right, here we go. Wednesday, May 27th, 4 p.m. The stock market is now closed. All right, we are done for the day. And now we enter into earnings mode. S&P 500 basically flat on the day, 750.45. Rocket Lab gets the 150 close. Absolutely incredible. ASTS gets a 129.60 close, just below that 130 all-time high. Micron, still a pretty good day, 928.41. That is green. ServiceNow, 102.16. That's up 2%. Everpure, down about 2.83% of the day. NVIDIA basically was, down 1%, but relatively flat, 208 to 212. So got a little bit of recovery. Meta, 635 based on that new subscription announcement. That one ended up green on the day. Google was green. Also, there was a semi-analysis report on Google. Google was basically flat. Semi-analysis report on Amazon, basically saying AWS is growing like crazy. That was the sort of takeaway from the semi-analysis report, and I think that's why Amazon pumped it as well. 2.47% on Amazon. Tesla, 440. That ended green on the day. Iran, 67.84. Nice day, 13.48%. Up on the day. The Qs were also just flat. And then BTC, we were at 74. technically don't close because Bitcoin's 24 hours, but we are below 75, 74,933, which is pretty much where we were in the morning. Lumentum, that was only down 0.5%. Poet was down about 0.5%. Abercrombie and Fitch up 9% on their earnings. And then you have Bloom Energy, that was down about 2.86%. All right, Salesforce numbers. We're down. We are down 2.4. The 2 and 3% candle moves are not legit. They can reverse very quickly. So let's hold off judgment until we see if this actually sticks. Salesforce has a double beat. Stock still down 2%. Wow. EPS, they beat by 24%. Street doesn't like it yet, but that's a beat. 388 versus 313. Revenue, they beat by 1%, 11.1 versus 11.06. EPS is up 50% year over year. Up, now it's going green. Revenue is up 13% year over year. Yeah, 24% EPS beat. I mean, you can't trust the 2% green either, but let's see if that's enough to not flip red again. I mean, that's a pretty big beat. Now, maybe they sold some stock in some private companies. Maybe there's some tax thing right there, but that is a hell of a, if that's actually AI-based efficiency. I mean, if that's a legit earnings beat that doesn't have to do with like some shenanigans around they had some private stake in a company from 5 years ago and they sold it, then that's very impressive. That means their operating margins actually went up. We'll dive into their numbers in a second. The stock is not really flipping that green. It was up 3. Now it's only up 1. But at least it's not necessarily going red. We have, okay, I have some more updates. Salesforce, fiscal year revenue, Street wanted 46.1. They raised to 46.2. That's a beat. EPS, Street wanted $13.23. They raised it to $14.12. That's a $1 beat. That's almost a $1 beat on EPS. That's got to be because margins are going up. The Street's got to be a little happy about that. Agentforce ARR surpassed 1.25 billion, up 205% year over year. AI and data ARR reached nearly 3.4 billion, up 200% year over year. They entered into their $25 billion share buyback, and management expects organic revenue growth acceleration in fiscal year 2027. The stock is flat. The Street has no idea how to price this right now. Now it's red again. Beat on revenue, beat on EPS, beat on the guide, raising the acceleration of revenue for the second half of this year. And then their AI businesses are up 205% and then 200% year over year. Seems like it is still not enough for Wall Street at the moment. Synopsys don't have their numbers. Nutanix, that's up 7. Nutanix is a beat on the top and bottom. Street wanted 740 on the guide. They came in at 745 on the guide, so it's a beat on guidance. Revenue 703, that's up 10% year over year. ARR 2.43 billion, that's up 15%. Operating margins 22.5%. Free cash flow guide to 780 million, and they're buying back 750 million worth of stock. Nutanix, again, smaller company, $12.2 billion company, that's up 5%. Wow, Salesforce still cannot get any love on these numbers. It's pretty incredible, dude. We'll pull up more of their numbers in a second and go through the rest of it. But that is, we don't have Marvell yet. That's the next big one. But that is amazing. The types of beat they just put up. Look at that. The Street doesn't want to buy it. They don't want to sell it necessarily, but they don't want to buy it. Snowflake, do we have those numbers? Snowflake's up. Wow, Snowflake's up 14. Okay, something that Snowflake said obviously got the Street to be a lot more excited. Marvell's out. Hold on. Let me get Snowflake and Marvell. Let's see if we can get both of these together. We have Marvell. Okay, I got Marvell first. They beat by 1%, 80 cents versus 79 cents on EPS. Revenue 2.41 versus 2.4. That's a beat as well. Marvell is struggling to find a direction. EPS is up 29% year over year. Revenue is up 28% year over year. Snowflake beat EPS by 22%, a little bit less than Salesforce, but they did beat by a pretty wide margin. 5% revenue beat, 1.39 versus 1.32. Revenue is up 33% year over year. EPS is up 63% year over year. Marvell just flipped green, up to, my goodness, Snowflake, 25%. It pulled a Datadog. Snowflake pulled a Datadog. I don't know what exactly they said. I'm looking at the top line numbers. The top line numbers, which Salesforce technically has better numbers for, but the Street wants Snowflake over Salesforce. 26% on Snowflake. I also have Synopsys. Is the stock up or down? The stock is flattish to down. Beat by 6% on EPS. EPS is down 9% year over year, 335 versus 316. Revenue 227 versus 225. They beat by 1%. Revenue is up 42% year over year. So Synopsys, unlike Salesforce and Snowflake, but declining on EPS year over year, but much higher revenue growth, probably because it's more AI adjacent to chips than Snowflake and Salesforce, with 42% revenue growth. Salesforce still basically flattish. It's up $1. Snowflake's your story. Marvell, all right, here's the pump. 3.94%. Let's see if that can continue going on Marvell, as that is a bit more green than not. Let's get a little bit of coverage on a few of these earnings first. Let's and then we'll pull up Marvell and Salesforce.
Revenue beat. It's also raising its full year product revenue outlook. That, I imagine, is a very good sign given the debate going into this report around the competition from the likes of Datadog, its main competitor in the cloud infrastructure space. Separately, Snowflake announcing it's increasing its investment in Amazon Web Services to $6 billion, which includes the purchase of its custom ARM-based Graviton chips. So a win there for Amazon as it continues to grow.
Hold on. Super bullish for Amazon. Maybe that's part of the reason why Amazon was up today. It's up a little bit after hours. It's funny, though. Snowflake's going to be spending $6 billion on AWS infrastructure, and the street's happy with that, which is a little confusing, right? Because all these companies that have been spending more on CapEx, like Zscaler said last night, they were down 30% today. So there's got to be something in these earnings the street likes, or the street's just like randomly deciding what stocks go up based on spending more CapEx. But they're initiating $6 billion of essentially operating expenses that the street doesn't care about, likely because it's going to lead to more growth.
Its semiconductor business. We have comments here from CEO of Snowflake, Sridhar Ramaswamy, saying AI continues to be a powerful tailwind for Snowflake here. You're seeing the stock skyrocket here by as much as 24%. Melissa and Michael wait for more details on the call. I would point out one other metric here. They now have 779 customers spending more than $1 million on a trailing 12-month basis. So a sign that customer adoption increasing, but also expanding amongst different clientele. Back to you.
All right, Seema.
This deal should also be super bullish for Marvell, because Marvell works with the Trainium chips and supplies a ton for Amazon. So Marvell, right, they're up 2.6, a little bit of a muted reaction. It did hit 210. Now it's back to 200. Again, this stock has moved like crazy. It was at $90 2 months ago. So one could potentially argue it's priced for perfection, but nonetheless, the numbers look relatively decent. Not a massive beat on the top and the bottom line, but enough of a beat based on the move it's already made for the street to be excited. And this stock for about a year and a half was stuck at $80-90. So, this has been a real re-rating and a breakout. Marvell right there, 203.40. ServiceNow should be up after hours because of this. Yep, ServiceNow is up 1.4%. Marvell up 2.3%. Snowflake 25% on Mr. Snowflake as that continues to go green. Marvell up 2.4%. Synopsys down 1.3%. That one's going red now. And Salesforce still can't catch a bid. Even this is so confusing. Snowflake says we're going to spend $6 billion, which is inevitably, yes, it'll help us grow. But I mean, that's money that's leaving the company. And the street's like, yeah, we love it. Up 26%. For what reason? I'm not sure. I mean, we got to go deeper into these numbers, but I'm really wondering what about their business versus Salesforce does the street have a better line of visibility on? Maybe the street just hates Agentforce. Maybe the street really just hates Agentforce and thinks that's just not the right way to monetize AI. Which, from my understanding, Agentforce is a chatbot. I mean, like Einstein, like that's. I have an elementary understanding of Salesforce's Agentforce, but every demo I've seen, it's a chatbot that helps like customers interact with their problems. But it's growing. It's up 205%. Street doesn't care. Snowflake 28% as that's getting moved. Datadog should also be getting a bigger move. Datadog right there, up 4.9%. Snowflake's a short squeeze, maybe. I mean, that could potentially be possible. Everpure, that stock is down 13%. She's going down. She is going down. Why is Everpure down 12.4? I don't know. But it looks, I still don't have the numbers, but it's down. Numbers might not be the best. Salesforce is now actually getting hit pretty hard, 3.5. Let's see if that crosses 5%. I don't know. We got to go deeper into the numbers to see what's happening with Salesforce. But regardless of these numbers, the street is very happy with Snowflake. I guess the partnership and consumption of AWS is enough. It is kind of weird, right, guy? Like, am I crazy for saying, hey, we're going to spend more on our cloud computing? Okay, cool. Stock's up 30%. It's like, why? Like, I'm just curious why. I'm sure there's some reason out there. You can't tell me it's increased growth because all these companies are growing. So what about this makes this the more compelling buy right here? Marvell, that's up 3. Everpure, what are the numbers? I still don't have Everpure. Let me pull this up. No, you're not crazy. Okay, but if you have Snowflake, I mean, congrats. This has made the move. Everpure, I still don't see the numbers. I don't have the numbers. Everpure, EPS 7 cents versus 8 cents expected. Oh my goodness, they missed by a penny. They took the stock down 12%. Revenue 1.053 versus 1.01. So it's a beat on revenue, a miss by 1 penny on EPS. And that's down. They also raised guidance. Street thought they would do 4.4. They're saying 4.5. So that 1 penny miss, I think, might be the reason. It's because compute equals revenue. Yeah, but all of these companies are spending more on compute. I mean, Zscaler yesterday said they're spending more on essentially CapEx, which for them is cloud computing. You could call it the similar thing that Snowflake is saying they're going to spend on. Like, Snowflake's not literally buying 6 billion of chips, but they're going to be working with Amazon and their proprietary chips. Yeah, that's going to help them grow. But I mean, Meta grew 33%, spent more on CapEx, and more compute equals more revenue growth, and Meta got hit by 15% after earnings. So there's got to be something deeper to this Snowflake story that's getting the street to be pumped up to buy it here. It also could have been the stock. You know, the stock was dead all year. I mean, that honestly could have been the other reason. Stock was down year to date going into the print 19%. Yeah. So, I mean, with this, it's only up 10% for the year. It honestly could have just been the valuation got too cheap. Any piece of good news was enough. Salesforce trying to recover. Marvell basically flat. Marvell did beat on the top and the bottom. Trying to get some more details on their guide. Stock's not moving like crazy. We'll try to see what they said on the guide in a second. Everpure, again, they beat on the guide. They beat on non-operating income. They beat on ARR. They beat on revenue. They missed on EPS. Free cash flow, 112 million. RPOs up 41% year over year. Street doesn't care. That stock is down 2%. Or sorry, down about 11% right there. MongoDB, do they have earnings today? No, they have earnings tomorrow. Oh, they probably have earnings today. How did I miss MongoDB? Is it today? No, MongoDB is tomorrow. So why are they up 9%? They might be following Salesforce or Snowflake. That might be pumping based on that. ServiceNow was also down year to date, so it might not be valuation. Yeah, I mean, I don't know at that point. ServiceNow was down worse than Snowflake going into their print, and they fell 20%. So you're right. I don't know. I don't know how the street is picking and choosing who's winning right here. MongoDB has earnings tomorrow. I think the street's front running it going into earnings because of Salesforce. Or it seems like that's the reason, or because of potentially Snowflake, as that stock is up 9%. HPQ is not out yet. We do have Synopsys. Let me pull that up right here. We'll take a look at their numbers.
$3.35, as well as revenue helped by strong demand for AI-driven chip design and advanced packaging tools across its electronic designs automation business, EDA. Plus, they saw solid momentum from their recent Ansys acquisition. Management is leaning into that strength and tightening up execution. The CFO saying in the release they see a strong second half and are, quote, raising our targets for revenue, operating margin, EPS, free cash flow for the year as we drive greater efficiencies across the business. They see a full year revenue midpoint of $9.66 billion with EPS of $14.76, both higher than estimates. Big picture, Synopsys is positioning itself right now as the picks and shovels play on AI, from the software that designs the chips to high value IP blocks. But the market reaction is not as positive. Shares down about 3%, guys.
HP is out, and the street likes it. 12%. EPS, they beat by 19%. 86 cents versus 72 cents expected. Revenue 14.4 versus 14.07. Revenue's up 9% year over year. EPS is up 21% year over year. Let's pull up their website. I imagine they said something decent about AI and data centers. And that's probably why the street is giving them a move. Is Marvell making a flip? Marvell is now making the flip. Here we go. 5% Snowflake. My goodness. 31%. It was a $60 billion market cap going into this. Again, AWS commitment to spend $6 billion along with a top line revenue growth of 33%, EPS growth of 63%. They did beat EPS by 22%, which, Snowflake doesn't do that often. So that much of a beat also probably got the street to be pretty excited, up 63% year over year. Snowflake up 30%. Marvell now up 7%. Trying to get more details on Marvell's guide. I don't see it yet, but they did beat on the top and the bottom. Amazon's up a little bit after the bell. Datadog's up 5% on those Snowflake numbers. MongoDB, which is also a database, that stock up 8.5% going into their earnings tomorrow. HP's up 13.6. ServiceNow's up 1.2. Salesforce, the only one that is flat to down. And then Everpure was down 12. Now it's only down 3. A little reversal right there. A little reversal right there. All right, Marvell, let's try to get some more details. 216, 222 was the all-time high in the pre-market. All right, here we go. Street wanted 2.6 billion on the guide. Marvell came out with 2.7. That's up 35% year over year. They beat on the guide. Street wanted 90 cents of adjusted EPS in the guide. They came out with 98 cents. That's a beat. Street wanted 53% gross margins. They came in line. They completed multiple acquisitions. Gross margins are 52 for Q1. Revenue was a beat, up 28% year over year. EPS was a beat by 1 cent, 80 cents versus 79 cents. Marvell up 7% after hours. CEO, we expect revenue growth to continue accelerating each quarter through fiscal year 2027, driven by continued strength in our data center business. We are seeing exceptional AI-related bookings. As a result, we are significantly raising Marvell's revenue outlook for both fiscal year 2027 and fiscal year 2028 compared with the guidance we provided last quarter. What is the fiscal year guide? I think that's the story, folks. That's why it's pumping. The fiscal year guide, I don't have the numbers on that. Cactus, if you can see if you can get the actual fiscal year guide increase, because I imagine they had to give the number. They didn't just say we're increasing the guide. That is probably the real story that's being priced in right now. Q2 guide is 100 million more than expected, but I imagine the fiscal year guide, if it's potentially $1 billion more than expected, that's why that stock would be moving. Micron after hours, is that moving? Yep, Micron moving a little bit with Marvell. Again, Marvell and Amazon both have a large partnership. Amazon right there, 272.64. Meta's up a little bit. MongoDB up 8%. HPQ was up 14. Now it's up 8. Datadog up 4. ServiceNow up 1. Synopsys still red. And then Snowflake holding on to 29. Holding on to 29. Snowflake announces intent to acquire Natoma. Natoma is a AI enterprise and cybersecurity platform. So this is even more, this is what makes their stock move really incredible. They're potentially announcing an acquisition, which costs money. They're spending $6 billion on AWS, and the street is excited for that, which they should be, right? The street should be excited if you're expanding the business, spending more money to grow. But the past few earnings we've seen across every single sector, if you're saying you're spending more money, you get punished. And thankfully, that's not happening to Snowflake, but that is a lot different than a few other of the earnings that we've covered. Snowflake right there, 29.5%. Marvell trying to get the full fiscal year guide, but that stock now up 6.5. It was at 220 or 216, now at 211 for Mr. Marvell. Snow just acquired 20 billion in market cap. That is also true. They did acquire 20 billion in market cap. Yes, we have Path tomorrow. I'll pull up Snow's numbers in a second. I'm just seeing if we can get some other coverage on the other names. Then we'll go deeper into Snow. Do we have it there? We looked at HP, right? No, we didn't look at HP yet. Okay, here are the numbers on HP. Then we'll get deeper into Snowflake.
In fact, EPS is 21% above consensus, the biggest beat since February of 2021. And if we break down the different businesses, printing and personal system revenue above expectations. Guidance is in line. Executives say strong execution in the second quarter is evidence that we can navigate headwinds in future quarters, and that cloud costs associated with agentic AI and security considerations are driving demand for AI workloads. We're seeing the stock come back here by 13% in overtime, guys.
All right, Sina, thank you. Well, shares of Meta ending the day higher after announcing subscription plans.
Okay, HP starting to go a little red. Is it HP Synopsys down to? Oh my goodness! Wow, this is earnings season, baby. 14% to 3% red in less than 5 minutes. What the hell did they say to get this to flip? Mongo still up 8, Marvell up 6. Everpure still down 5. Salesforce, for a lot of people asking what happened with Salesforce, we'll look at their numbers in a second, but based on the top line numbers, I really don't know why it's red. But it is. There's got to be something the street does not like about it. And then you've got Snowflake still holding 29%, HP trying to come back to green. Okay, Snowflake's numbers. Let's pull that up and then we'll go into Salesforce. So Snowflake, revenue of $1.39 billion. That's up 33% year over year. They have net revenue retention of 126%, 779 customers spending more than $1 million. AI continues to accelerate our core data platform business as customers move to Snowflake with increasing urgency. 13,600 accounts, 1,616 net new customers, expanded partnerships with AWS, a new $6 billion multi-year agreement designed to accelerate enterprise AI adoption globally. Maybe the street is thinking that this partnership with AWS is going to make Snowflake a de facto data lake that new customers that are using AWS and running their AI workloads on will already be able to integrate through. So it's like, yes, they're spending $6 billion on more cloud compute, but they're also getting access to a lot of new customers that obviously AWS has distribution to. And that might be enough for the street to say this is worth the $6 billion. They signed a definitive agreement to acquire Natoma, an enterprise model context protocol platform for AI agents, to make it easier for users to securely connect AI tools to the things they use every single day beyond Snowflake. Okay, that's what you got with Snowflake. Those are the numbers, and it looks like the street is happy about it. Salesforce, let's go to their numbers. By the way, Synopsys, Elliott agrees to not exceed 5% ownership or 7.5% economic exposure in company stock during cooperation period. I forgot that Elliott has, which is a private equity firm, has a stake in Synopsys. So Elliott just came out with an SEC filing saying we will not own more than 5% of the business over the cooperation period with Synopsys. Synopsys right there down 2.72%. Marvell 216 down to 205. This one not easily holding. The only one that's really holding their gains is Snowflake. It's not letting go even a little bit. I mean, it fell from 230 to 226, but it's up from 175. That one is not letting go of anything. Salesforce right there, still down 3%. All right, Salesforce. What did they say? That's getting the street upset. RPO, $33.6 billion, up 14% year over year. First quarter subscription revenue, $10.6 billion, up 14% year over year. Overall revenue up 13% year over year. GAAP margins of 21%. Not the most amazing margins, but nonetheless, the street's not necessarily new to Salesforce having those margins. Salesforce CEO, this was an outstanding quarter for Salesforce. Record revenue, record deals, and cash flow. Agentic AI is the biggest growth opportunity for our customers and for Salesforce. We're the #1 agentic CRM with Agentforce now powering every customer 360 application and helping tens of thousands of businesses across every industry transform into agentic enterprises with more than $1 billion in Agentforce ARR, which is up 200% year over year. $3.4 billion in combined AI and data ARR and 3.8 billion agentic work units delivered for our customers. Salesforce has never been more essential. I want to know, how did they beat EPS by 24%? Because their margins look kind of basic. It doesn't look like their margins have increased that much. So was it like an acquisition? Was it a sale? Because maybe that's why the street's like, okay, this wasn't that impressive if the EPS beat wasn't that substantial. Guidance, they're initiating to $11.35 billion. That's a little bit above what was expected. They're raising their midpoint guidance to $46.2 billion, a little bit above expectations. Yeah, their operating margins are 21%. I don't think the margins going up, because I don't see the margins going up, was the reason for the EPS beat. There had to be something else for why they got that beat. Or maybe the street was just really wrong at modeling their numbers and it's the street's fault. Oh, right. Buybacks. I forgot. That is correct. Thank you for that in the chat. I forgot. They bought that. Dude, if I had known that immediately, I wouldn't have been that excited about the EPS beat. Of course, they bought back a ton of stock. So yeah, the shares are going to go down, outstanding. The EPS divided by the number of shares will go up, and then boom, there you go. That's not that impressive. That, I mean, if you take away the buybacks, I don't know. Let's hear our boy Brent Thill and see what he has to say on these Salesforce numbers as they've just come out.
To create agents to run workloads in a safe harness, and Snowflake will be that safe harness to let these AI workloads run in the enterprise.
How much duress is Salesforce in? Is it in the bucket of AI roadkill, Brent?
From an investor perspective, it is. You can look at the year-to-date numbers. You can look at the reaction. You know, I think we're at our software conference down in Newport, and we had many CIOs present about the fear of applications getting impacted from AI. So horizontal apps and back office, front office, you know, Salesforce unfortunately is in that category. The good thing for Salesforce is I think they had good numbers. They maintained the full year. The numbers weren't awful. They weren't the inflection we're seeing in the growth we're seeing in Snowflake, right? Snowflake grew backlog 38%, and Salesforce is growing, you know, in the low teens. So you can see a difference in the application companies' growth rates. They're a lot lower. Infrastructure is a lot higher. So I think we're just saying keep it simple. Stay underweight software, stay overweight infrastructure, stay underweight the application category. I think Salesforce will figure out a way to bounce out of this. But right now they're, you know, kind of considered a name that's under duress because of many of these AI themes. And then if you look at the departures, there's been an incredible departure list from Salesforce. You know, Denise Dresser going to OpenAI, who's an incredible leader. You've seen just
yeah, even our boy Brent is not that excited about these numbers. He's basically saying stay underweight software, overweight AI infra, and hopefully Salesforce figures it out. It's not that the buybacks are bad. It's just I was excited that they beat by EPS this much because I was like, oh, their margins are going up, which means that the AI, you know, the AI spiel that they've been talking about is really helping them internally to increase productivity. The margins are flat at 20.6% because guess what? They pay a lot of salespeople. That hurts their margins. And the only reason the EPS beat happened was because they bought back stock, which is not a bad thing, but it's not an organic reason. Marvell up 4% for why the stock is, or why they beat EPS by 25%. And I think the street kind of sniffed that out as well. Paul, thanks for the super chat. Marvell usually updates fiscal year guidance during the call. They were at $11 billion for fiscal year 2027 and $15 billion fiscal year 2028. Okay, so if they're going to announce it during the call, and they said in the press release that they have substantially increased their fiscal year rev guide, then if that 11 and 15 turns into 15 and 20, maybe that's what the street's waiting for before this thing shoots up after hours. So I guess the call is going to be really important to see what they end up doing. Marvell right there up 4.18% after hours. Isn't that the Apple method? Yes, it is the Apple method, but I think Apple is you know, much more of a loved company than Salesforce. Also, Apple is just way bigger of a global brand than Salesforce. You know, everyone can buy an iPhone, whereas not everyone cares about enterprise software. And so, yeah, it's the Apple strategy, but Apple just had so much excess. I mean, Apple's bought $800 billion of stock in the past decade, right? They have so much cash, they don't know what to do with it. Salesforce, theoretically, if Benioff is saying they are the AI kings, they should be growing more than 15%. Their EPS margin should be way better than 20%. I mean, for context, you know, companies like Palantir have 51% operating margins. Salesforce is at 20. Like, I know they're at a different scale, but the point is, if you're the AI king and you have all this extra cash, then theoretically, you know, you should be growing faster. You should be having better margins. And I'm not seeing that in the print right now. Now, granted, is the valuation cheap? Yes, the stock should not be trading at these levels. I do not think it should still be stuck at 170, but I think that's why it's not making a move after hours. Down 2.75% on Mr. Salesforce. Oracle, is that green after hours? Oracle, that's up a little bit. Amazon's up a little bit. Micron, it was pumping a little bit more. Now it's relatively flat. Mongo up 8.7. HP up 1.2. Meta, that's also flat. Let's get some coverage real quick on Meta. And then we got to figure out what call are we listening to. What call are we listening to? I think we should listen to the Salesforce call, especially if they do it via video. Might be worth listening to, but we got to see which call we think we're gonna take a peek into. Here's the Meta updates today for why this one ended up going green.
Revenue streams with new paid offerings across its family of apps. Facebook Plus and Instagram Plus for $4 a month and WhatsApp Plus for $3 a month will give users access to extra features like profile customization, super reactions, and insights into who's watching stories. Meta says it will also start testing new subscriptions for businesses, creators, and Meta AI users, with all the subscriptions under the brand Meta One. In addition to the free version of its Meta AI app and website, Meta One AI will be available for $8 for the Plus version and $20 for the premium version for access to deeper reasoning and more advanced image and video generation options. This news comes as today Meta also held its annual shareholder meeting, where CEO Mark Zuckerberg talked about the opportunity to offer subscriptions to personal AI agents in the future. He also spoke about potential revenue opportunities in selling computing capacity and also potentially building a cloud business down the line. So really sounds like Zuckerberg's thinking about all the ways the company could grow its revenue streams.
I think Zucks is getting annoyed of his stock being stuck in the gutter. If they start to introduce more monetization avenues, which is, I think, the only reason the stock has really been getting hit. They're spending all this on CapEx, but it's only going into ads. Maybe that's where you get a re-rating on Meta. And maybe the stock starts to trend up. 635 right there on Meta, up a little bit after hours. Micron again, off about 0.5%. Snowflake is the winner today. Snowflake is the absolute winner, 33%. Some of the software names, they get the love. The other ones don't. But I think this Amazon partnership in particular was enough to get the street really excited. And you got a 30% move on a stock that was down, 20% year to date. Okay, I see a lot of Marvells and a lot of Salesforces. I can do a poll. Salesforce will be a video. And Marvell, I've never heard a Marvell call before. I'd imagine it's probably pretty boring, but the main thing that people would care about is guidance. We don't really need to listen to the call to get the guidance. We'll get the guidance regardless of the call. But it's whatever people want to listen to. I also would want to kind of see how Benioff justifies, their AI supremacy. All right, which one? Marvell or CRM? I think more people own Marvell, though, so you might have to. Has anyone listened to Marvell's call before? Is it kind of boring? Because I would imagine it's not really going to be that exciting, especially if there's only one number that we care about, which is the guidance, which I'll make sure you guys get that number without sitting through the whole call to hear this one number. Salesforce right there, down 2.2. Now, I wonder if Salesforce will do a video again. They did a video last time. If they don't do a video this time, that would be quite interesting. Because maybe they gave up on the video, but I still think they want to do that. Yes, Marvell is releasing guidance on the call. Again, the guidance number I will get as soon as it comes out. I mean, I don't really care. We can listen to whatever, but I feel like Marvell is going to be a bit more boring. Who's the Marvell CEO? Marvell CEO. Matt Murphy. Yeah, I've actually never heard this guy talk. All right, so we will see. Any other numbers? Let's see. We talked about Everpure. We talked about Salesforce. We talked about... Snowflake. Goldman Sachs. Wow. Why are they so bearish? Maintains $125 price target on Marvell Analyst sees inline results and strong guidance, but notes future stock performance depends on the magnitude of the custom compute ramp in the second half of the year. What is the average price target on Marvell? On Marvell, it is 177. Wow, the sell side has not caught up with the stock price performance. For Salesforce, it's 250. Obviously, that's way lower than where it is right now. And then what's the other one? Snowflake, it is 224, which Snowflake now after hours just above 224, 232. And so that one continues to be green. Heiko also had earnings. HEI, Heiko Corp, $43 billion company. That's up 10% after hours. Revenue $1.3 billion. Net income $233 million. Organic sales growth of 18%. Electronic technologies revenue jumped 34%, driven by aerospace, defense, and space products. Operating margins expanded across both major business segments as well. Yeah, S&P inclusion. When is the next? It's in June. It's like in 3 weeks. We're going to get, not in 3 weeks, less than 3 weeks. Literally June 5th, we're going to get S&P 500 inclusion. SoFi, Reddit, Marvell. There's a lot of companies that potentially have a chance to get in. And so we're going to keep an eye on them. ASMC, American Superconductor, that stock is down by 5. Looks like the street didn't like their numbers either. Revenue 86 versus 66. That's a beat year over year. GAAP EPS 312. They guided for 85 million of revenue. Guided for net income of $3 million. And EPS of 17 cents. Record quarterly and full year revenue. Stock was up 70% going into the print. So to be honest, kind of a Marvell story, a little bit price for perfection right now. Strong demand from utilities and data center infrastructure customers. Backlog expanded sharply, supporting fiscal year 2026 visibility. Organic revenue growth of 25%. Yeah, it doesn't seem like the quarter was wrong. It's just that stock down 6.3%. HPQ, is that back up? We looked at their numbers. They were pretty good. Still flat after hours. It was up to 29, fell all the way to 23, now back to 25.50. Oh, you're right. I don't know if SoFi can get in this time. They needed to hold 1850 for like 6 months, right? I think if you take the weighted average price over the past 6 months, maybe, because they were trading at 24 for a while. But we're going to have to see if they could be eligible to still get in. Okay, Iren still at 67.84. That one again was up 13%. Meta as well, flipping slightly green. Dude, if Meta can change the narrative here, 640, 650 doesn't sound that crazy. It's one of the only Mac 7s that hasn't really moved this year, along with Microsoft. I mean, this would be kind of fun to see Meta turn this around and get the street excited about them again. Microsoft as well, that's green after hours as that continues to move. Okay, what'd you guys say on the poll? 58% of you say Marvell. So Marvell will be the one we listen to. Their call is going to be live in about 5 minutes. And we will take a listen to Marvell and see what they've got. This was the coverage today based on Jamie Dimon, who had a bunch of different thoughts this morning on what's going on with AI and the banking sector.
The timing of when that happens is up to the board.
It's always so interesting, Leslie, in the sense that investors and us, everybody, has been fixated on this because he's been CEO for so long. He kind of built the JP Morgan as it stands right now. But the whole point kind of JP Morgan as it now exists is that it should just be almost impenetrable, no matter who's running it. You know, it's the old Warren Buffett thing. It's like, you know, you don't want to count on a superstar CEO to run the business. And it is fascinating because it has the premium valuation to a point where he says, I don't want to buy back much of the stock. And he's treating a potential acquisition of 1.25% to 2.5% of JP Morgan's market value. That's $10 to $20 billion, as if it's something that would be a little bit of a big lift at this point.
Well, if you look at his track record, The types of deals that they've done, there was the First Republic deal that they basically paid $11 billion to regulators to buy that one, that failed bank. And then they did a couple of crisis era deals. They did some fintech deals. There was the Frank deal that was acquired for $175 million that ultimately turned out to be a fraud. So we haven't really seen him do a $10 to $20 billion deal that's kind of your basic M&A that we would see kind of at any other company. Now, part of the reason for that is because of the size and scale of JP Morgan. It's unlikely that they would be able to merge with another bank. So what does that mean? Is it an asset manager? Is it a payments company? It would have to be something, maybe more on the fintech side of things that they would have to consider. $10 to $20 billion is sizable. And then also you have excess capital that's resulting from this deregulatory shift that we're seeing. So there are numbers out there. I think JP Morgan's excess capital is about $40 billion. So what do you use that on? You're not going to use it on buybacks if you think your stock is too high. You can invest it in your company. But $40 billion is a lot of money to invest in your company. So maybe there is some kind of inorganic opportunity for them to do as well. And then kind of to tie it all together, does that ultimately happen before he passes that baton, before that succession idea that we were just talking about?
Got Marvell in a couple minutes. Here's finishing up with some of these thoughts on Salesforce.
And so I think Mark Benioff has to address this. Is when you look at that magnitude of turnover, we're not seeing that in infrastructure software. We're seeing it in applications, and we're seeing it in Salesforce. So I think they have to address that concern as well.
And software companies, Brent, I mean, in addition to figuring out whether they're going to be disrupted by various AI applications, or also it's coming to the surface how much of a consumer they are, right? Just in experimenting and spending, Benioff's comments about what they're going to be paying Anthropic this year and all the rest of it. Have they sorted out exactly, how much of their own code writing and everything else is going to basically be doable in this way? Or are they still in the experimentation phase?
Yeah, I think we're in the experimentation phase. Again, at our software conference in Newport today, our CIO spoke about 5 application companies we could potentially see a reduction in spend because we are using Anthropic, we are using OpenAI to build new frameworks and custom build these solutions. So I think what you're seeing is there's signals today that that's happening, but you're hearing from CIOs that are making the purchasing decisions that because many of these application companies haven't delivered innovation, and Anthropic and OpenAI are, that they're going to not rip them out, but they're going to stall the spend on the apps, and they're going to put more spend into Anthropic and OpenAI. And so I think it's going to be a world where both coexist. The systems of record with OpenAI and Anthropic will exist together. But again, it's the application companies have to act fast. And Salesforce, again, it's good to hear Mark, saying that he's spending on Anthropic and getting, the agent force numbers higher. It's really early for AI for the app companies. It's like 3, 4, 5% of total revenue. It's not a major driver. So this is why Micron goes higher every day, because of the influence that memory's having in AI, and the software companies go lower is because AI is not having an impact. It's in many cases it could potentially cannibalize some of their businesses. And then I think the other fact is, if you look at the client server to cloud movement, right? We had very few companies make that transition, right? PeopleSoft didn't make it; they got bought.
I think that's a really fair point. So basically, Jeffries is making the argument that the AI infrastructure foundation model companies are innovating like crazy. And you see this with partnerships around Anthropic and OpenAI and all these other different industries, whether it's asset management or supply chain logistics. And they're building software applications internally inside of the foundation models as layers that they can upsell on, which doesn't mean the enterprises are not going to spend with the software platforms, but they just might halt their spending with a Salesforce, for example, to test out Anthropic's new CRM. Salesforce's argument needs to be that we have a way better way of going to market, and by innovating on your existing data that you've trusted us for the past 20 years, so you should be paying us that AI revenue, not Anthropic. But the lack of the speed at which they're moving on those applications is where Anthropic and OpenAI have a lot of essentially lunch to eat of those bigger companies. And then obviously if Anthropic's growing, then you're going to need more memory, you're going to need more GPUs, so the AI infrastructure names are growing. So, I mean, it makes sense why you've seen the rotation. It's just, once again, the rotation has been very violent if you've not been able to actually grow earnings. All right, Marvell, I think we are live. Let's get started with that. I'll give you guys updates throughout the call on the other companies, but here is Marvell.
Thank you. You may begin.
Thank you and good afternoon, everyone. Welcome to Marvell's first fiscal quarter 2027 earnings call. Joining me today are Matt Murphy, Marvell's Chairman and CEO, Willem Meintjes, CFO, Chris Koopmans, President and COO, and Sandeep Bharati, President, Data Center Group. Let me remind everyone that certain comments made today include forward-looking statements, which are subject to significant risks and uncertainties that could cause our actual results to differ materially from management's current expectations. Please review the cautionary statements and risk factors contained in our earnings press release, which we filed with the SEC today and posted on our website, as well as our most recent 8K, 10K, 10Q, and other documents filed by us from time to time with the SEC. We do not intend to update our forward-looking statements. During our call today, we will refer to certain non-GAAP financial measures. A reconciliation between our GAAP and non-GAAP financial measures is available in our earnings press release. Let me now turn the call over to Matt for his comments on the quarter. Matt?
Yeah, thanks, Ashish, and good afternoon, everyone. For the first quarter of fiscal 2027, Marvell delivered record revenue of $2.418 billion, reflecting 9% sequential and 28% year-over-year growth. Revenue exceeded the midpoint of guidance, and as a result, non-GAAP earnings per share of 80 cents exceeded the midpoint of guidance by 1 cent. We are seeing strong demand and exceptional bookings across our entire data center portfolio. This robust demand is reflected in our guidance for the second quarter of fiscal 2027, where we expect total company revenue to grow 12% sequentially and 35% year-over-year at the midpoint to $2.7 billion. On our earnings call last quarter, we indicated that beginning in Q2, we expected quarterly revenue growth throughout fiscal 2027 to trend in the high single-digit range sequentially on a percentage basis. Q4 revenue exiting the fiscal year at approximately $3 billion.
Okay, I'm going to switch it real quick. There's going to be a little delay, so you're going to have to hear the same thing you heard for the past 10 seconds, but you'll get the chart. So should still be helpful.
For the second quarter of fiscal 2027, where we expect total company revenue to grow 12% sequentially and 35% year-over-year at the midpoint to $2.7 billion. On our earnings call last quarter, we indicated that beginning in Q2, we expected quarterly revenue growth throughout fiscal 2027 to trend in the high single-digit range sequentially on a percentage basis. Q4 revenue exiting the fiscal year at approximately $3 billion. We are now guiding Q2 revenue to grow double digits sequentially, and we expect Q3 and Q4 revenue to also grow by at least 10% sequentially. As a result, we now expect $3 billion in quarterly revenue in Q3, one full quarter ahead of our prior outlook. We also continue to expect year-over-year revenue growth rate to accelerate each quarter throughout fiscal 2027, reaching approximately 50% by Q4. As a result, we now expect overall Marvell revenue in fiscal 2027 to grow approximately 40% year-over-year to nearly $11.5 billion. The increase in our revenue outlook continues to be driven by our data center business, which we now expect to grow approximately 50% this fiscal year. Notably, we expect our interconnect business to grow more than 70% year-over-year, well above our prior expectation of 50% growth. I will provide additional color on our interconnect business later in today's call. For our communications and other end market, we continue to expect revenue growth of approximately 10% in fiscal 2027. Now looking ahead to fiscal 2028, while we are planning for the rate of cloud CapEx growth to moderate into the 30% plus range, we expect strong data center revenue growth for Marvell to continue. We expect our interconnect business to continue to outpace cloud CapEx growth, reflecting strong 1.6T demand from scale-out networking and more meaningful contributions from scale-up and scale-across networking. We now expect our custom business to more than double year-over-year in fiscal 2028, higher than our prior outlook, and expect our Ethernet switching business to continue ramping. As a result, we expect data center revenue in fiscal 2028 to grow approximately 55% year-over-year, accelerating from fiscal 2027's projected growth rate. For our communications end market, we continue to expect low single-digit percentage revenue growth in fiscal 2028, consistent with our prior view. In aggregate, we now expect overall company revenue to grow approximately 45% in fiscal 2028 off a higher fiscal 2027 base. As a result, we now expect Marvell's fiscal 2028 revenue to reach approximately $16.5 billion, roughly $1.5 billion higher than the outlook we provided on our earnings call last quarter. This outlook is supported by demand trends we are seeing today and by programs already in execution. Our investments in securing supply are paying off, enabling us to scale the business every quarter. As we move through the fiscal year, we expect to remain closely aligned with our customers as they continue investing aggressively in AI infrastructure. Now let me turn to the expanded partnership we announced with NVIDIA, which reflects the growing importance of high-speed connectivity, optical interconnect, and accelerated infrastructure in scaling AI. The collaboration connects Marvell's custom silicon and optical networking capabilities directly into the massive NVIDIA ecosystem to help build scalable, highly efficient AI data centers and telecommunications networks. There are three core pillars of this exciting announcement. First is our optics partnership. Marvell has long been a key supplier of DSPs, TIAs, and drivers, and we are now extending this relationship to collaborate on silicon photonics technology, which is expected to be a key enabler of scale-up networking. Second, NVLink Fusion integration. This allows Marvell to build custom chips and networking semiconductors that can seamlessly interface with NVIDIA infrastructure. It increases choice for hyperscalers who will now have complete flexibility to mix and match custom and merchant capabilities across their platforms, with Marvell uniquely providing the bridge between these two architectures. We expect this to create new market opportunities for both Marvell and NVIDIA going forward. Third is AI RAN. Marvell will enhance its existing Octeon base station processors to work directly with NVIDIA GPUs, integrating AI with wireless infrastructure on a single software-defined computing platform. This will enable telecommunications operators to run both 5G and 6G radio workloads and high-performance AI applications concurrently on the same hardware. Since the announcement, both teams are off to the races, and we are working closely together to realize the benefits of this collaboration. We deeply appreciate the partnership and the investment from NVIDIA. Okay, let me provide more color on our current business, beginning with data center. In our data center end market, we delivered record first quarter revenue of $1.83 billion, representing 11% sequential growth and 27% year-over-year growth. We achieved sequential and year-over-year growth across multiple product lines, including optical interconnect, custom silicon, and switching. Looking ahead to the second quarter, we expect data center revenue growth to accelerate into the mid to high teens sequentially on a percentage basis and into the mid 40% range year-over-year. Our networking products, including interconnect and switching, are driving strong revenue growth as networking becomes increasingly critical with each new generation of AI infrastructure. Now, in the early stages of generative AI, the primary focus was on addressing compute and memory bottlenecks.
All right, in 6 minutes, I'm going to Salesforce. We got the guide. That's all that matters. If you want to still listen to Marvell, I'll put another link in the chat. You can go to Marvell. But in 6 minutes, we'll go to Salesforce as this was the guide. The guide is crazy, by the way. They raised it by $1.5 billion for 2027 and 2028. So obviously the street is liking the guide that they put up.
Next. As more complex architectures such as reasoning models and mixture of experts have begun to deploy, the role of networking has become significantly more important. And this is a key driver of the increased demand we are seeing today for our scale-out networking products. Now, what is completely in front of us is the massive expansion expected in scale-up networks as these domains become significantly larger, requiring high radix, low latency switches, as well as high bandwidth optical interconnects. In addition, these new AI models are also driving innovation in memory architecture, which we expect will benefit our XPU attach business. We expect the emergence of agentic AI to further supercharge demand for our scale-out, scale-up, and XPU attach businesses. In agentic AI, a single user request may require agents to query AI models many times, rather than just once, as in traditional one-shot inferencing. These queries may also be routed to different parts of the AI cluster to complete a single task. This substantially increases the volume of data traffic that must be transmitted and switched with very low latency across longer reaches, as well as the amount of memory required. Agentic AI is also expected to drive a significant increase in the number of CPUs deployed in AI infrastructure. More CPUs require more NICs, PCIe switches, and retimers, as well as greater bandwidth and CPU-centric front-end networks. As a result, we believe agentic AI can provide another significant tailwind for our interconnect, switching, and XPU-attached franchises. It's increasingly clear that optics is the future of data center connectivity, and we continue to invest aggressively in our technology platform to extend our leadership in this rapidly expanding market. Our latest addition is the acquisition of Polariton, a developer of high-speed, low-power plasmonics-based silicon photonics devices. Plasmonics offer meaningful advantages over traditional silicon photonics by enabling substantially higher modulator bandwidth, which is critical for supporting faster optical transmission speeds. Polariton has already demonstrated plasmonic modulator bandwidth exceeding 1 terahertz, up to 10 times higher than current silicon photonics and thin-film lithium niobate-based solutions. We are excited to incorporate this breakthrough technology into our DCI and coherent light roadmaps, extending our technology platform to 3.2T and beyond. Let me now pivot back to the near term and discuss trends we are seeing across both our established data center businesses and our newer growth initiatives. I'll organize the discussion into 3 categories: interconnect, switching, and custom. I'll start with interconnect, which represents the largest portion of our data center business. Demand for our interconnect products continues to accelerate, and as a result, we have increased our fiscal 2027 revenue growth expectations for this business to more than 70% year over year. Interconnect is also a major driver of the higher fiscal 2028 company revenue outlook we provided today. We are benefiting from our leadership position across the industry's broadest portfolio of high-speed connectivity solutions, spanning scale-out, scale-across, and scale-up networking. Within our scale-out PAM franchise, demand continues to strengthen for our 800 gig products, while our 200 gig per lane 1.6T solutions are ramping quickly this fiscal year, following their production launch in the second half of fiscal 2026. We expect 1.6T revenue to take another substantial step up in fiscal 2028. We continue to benefit from the first-to-market cadence we have maintained across successive PAM4 generations. We also expect to maintain leadership into the next PAM4 generation with 400 gig per lane technology, which we demonstrated first at the Optical Fiber Conference in April 2025. In addition to our DSP franchise, we have also built a formidable position in broadband, analog, TIAs, and drivers. This business is scaling rapidly, and we expect quarterly revenue from TIAs and drivers to exceed a $1 billion annualized run rate in the next few quarters. To support campus-wide data center architectures requiring longer reach than traditional PAM solutions, we were the first to introduce coherent light products to the market. These solutions are optimized for applications spanning 2 to 20 kilometers within an extremely low power envelope as compared to traditional coherent DSPs. Over time, as speeds continue to rise, we expect coherent light to penetrate deeper inside data centers, complementing PAM-based solutions for shorter reach applications. We've already begun shipping the first generation of our coherent light 200 gig per lane 1.6T products. We are now introducing next generation coherent light products featuring integrated MACsec security as well as higher speed capabilities. Turning to DCI, this market is undergoing a major architectural transition driven by the emergence of scale-across networks, which we believe will significantly expand the opportunity for pluggable DCI modules over the next several years. Marvell pioneered the pluggable DCI market, where the original use case was driven by hyperscalers replacing public WAN connections for intersite connectivity using pluggable modules, with traffic between data centers originating primarily from traditional front-end networks. This has become a highly successful business for Marvell, and today we ship DCI solutions to all 5 major US hyperscalers.
All right, switching to Salesforce. I'm putting the Marvell link in the chat. If anyone wants to see it, you can go to the link. Switching to Salesforce now.
To the Salesforce first quarter fiscal 2027 conference call. This conference is being recorded and all lines have been placed on mute to prevent any background noise. After the speaker's prepared remarks, there will be a question and answer session. At this time, I would like to turn the call over to Mike Spencer, Executive Vice President of Finance. Sir, you may begin.
Good afternoon, and thanks for joining us today on our fiscal 2027 first quarter results conference call. Our press release, SEC filings, and a replay of today's call can be found on our website. Joining me on the call today is Mark Benioff, Chair and CEO, Robin Washington, Chief Operating and Finance Officer. We also have Patrick Stokes, President and Chief Marketing Officer, Miguel Milano, President and Chief Revenue Officer, and Srini Talapragada, President and Chief Engineering and Success Officer, joining us for the Q&A portion of the call. Some of our comments today may contain forward-looking statements that are subject to risks, uncertainties, and assumptions, which could change. Should any of these risks materialize, or should our assumptions prove to be incorrect, actual company results or outcomes could differ materially from these forward-looking statements. A description of these risks, uncertainties, and assumptions, or other factors that could affect our financial results or outcomes is included in our SEC filings, including our most recent report on Forms 10-K, 10-Q, and any other SEC filings. Except as required by law, we do not undertake any responsibility to update these forward-looking statements. As a reminder, our commentary today will include non-GAAP measures. Reconciliations between our GAAP and non-GAAP results and guidance can be found in our earnings materials and press release. And with that, let me hand the call over to Mark.
All right, fantastic. Thanks so much, Mike. I'm so excited to be here with everybody, and great to do our second video earnings call with you. And it's really great. It's a gorgeous day in San Francisco, and we're going to have a great time here with you. We've even got a couple customers joining us, which we're really excited about. Well, I think as everybody can see, this was really an outstanding quarter for Salesforce. We have delivered record revenue, record deals, and just incredible cash flow. And of course, I think, we've also returned record levels to our investors. We're going to talk about that and how important that is, especially during this unusual time. So we're going to come into that. And also, by the way, we also mentioned we have some record token counts. I think we're going to talk about how we processed 28.6 trillion tokens, up 152% quarter over quarter. No greater example of the tremendous adoption of these new agentic products by our customers and how we've converted those into 3.8 billion agentic work units. Agentic AI, well, it's the biggest growth opportunity for our customers, for us at Salesforce. And since we brought CRM into the cloud, we're just seeing tremendous new innovation every single day. And you can see it in our products, you can see it in our customer momentum, you can see it in our results. Salesforce has never been more essential to our customers. We're going to hear from them in just a second. And we're the #1 agentic CRM, transforming every company into an agentic enterprise. Now, let me tell you about these amazing Q1 numbers. Revenue was $11.13 billion, up 13% year over year nominal and 12% in constant currency. CRPO $33.6 billion, up approximately 14% nominal and 13% in constant currency. And Q1 non-GAAP operating margin of 34.8%, up 250 basis points. Again, hitting some record levels. GAAP operating margin of 21.1%, up 130 basis points. Pretty awesome. And we delivered $6.7 billion in operating cash flow. Tens of thousands of businesses across every industry are building their agentic enterprises with Salesforce. We're going to talk about that today. And OpenAI, Anthropic, Google, companies building the future of AI, all of them Salesforce customers, all of them Slack customers, building these incredible new capabilities with Agentforce. We secured a record 98 Q1 deals with over $1 million in new ACV in the quarter, 98 Q1 deals with over $1 million. Miguel is going to talk about that today. Organizations like LVMH, Chobani, the U.S. Air Force, which, by the way, just signed a new $72 million ELA with us during the quarter. Awesome. And we're seeing incredible demand for Agentforce with ARR now greater than $1 billion. And combined with Data 360 and Informatica Cloud, we've delivered $3.4 billion in AI and data ARR. 50% of Agentforce and Data 360 bookings were from existing customers expanding their commitment. And to date, we processed 28.6 trillion tokens, up 152% quarter over quarter, and converted them into 3.8 billion, as I mentioned already, agentic work units for our customers, up 111% quarter over quarter. Agentforce now powering every customer 360 application, and it's changing how organizations operate across service, sales, marketing, commerce, and so much more. Nowhere is this more evident than in customer service. Let's just start right there with Agentforce Service. Humans and agents collaborate across every channel, from first contact to first resolution, across the trinity of channels, voice, website, apps. A great example you're going to hear in a moment, UCLA Health. If you go to uclahealth.org, you'll see right away Agentforce is there to help you get your questions answered, to connect with their physicians, to connect with their technology at UCLA. It's a great example using our most current version of Agentforce. And since we deployed Agentforce on help.salesforce.com and on 1-800-NO-SOFTWARE, well, only 15 months ago, it's autonomously handled now 4 million inquiries. It's now double what human agents are handling. Every customer can turn this on now. So many customers are seeing incredible results with Agentforce service. Vivino, the world's largest wine company, supporting 74 million users with only 37 reps. Kind of hard to believe, but it's possible because its agent, Vivina, autonomously handles order status lookups, account questions, more autonomously, slashing resolution time by 70%. McAfee has selected our new Agentforce ITSM product, or what we call Agentforce IT Service, to replace ServiceNow. They are using it for everything: ticket deflection, hardware provisioning.
Guys, we got some big news real quick. Leopold Situational Awareness just bought a new stock, 12 million shares of Nebesis. Nebius. He buys Nebius. That stock's up 4% after hours. He has a lot of Iran, a lot of CoreWeave. He had 0 Nebius. I'll try to get his average, but 5.6% stake in Nebius, 12.4 million shares. That's a massive endorsement from someone who has been pretty right about the AI trade so far. 12.1 million shares by Leopold Situational Awareness LP in Nebius.
In marketing and Slack and all of these things. Another great example, cybersecurity leader Fortinet using Agentforce Sales to power predictive lead scoring. Financial leader Agribank now build an SDR agent that instantly qualifies leads on WhatsApp. You can go to salesforce.com and even see our own qualification system running right on our homepage as well. Okay, in Q1, we completed the acquisition of Qualified and integrated Piper, their SDR agent, into Salesforce, brought all those great Salesforce alumni back home. More than 700 customers are already using Piper. It's an incredible success, and we deployed Piper on salesforce.com, as I mentioned, so you're going to be able to use it firsthand. I think that's so great. It's engaging 50% of our traffic and qualifying thousands of leads and delivering 45% more pipeline than traditional web agents. Also very excited about our new Agentforce Coworker, which we announced last week. If you haven't heard about that, every single one of our Salesforce applications now comes with a built-in autonomous agent. No complex configuration. You just turn it on. It becomes your coworker, finding answers, taking action, getting work done fast. To give you an idea of the impact that Coworker will have, people search for information inside Salesforce 1 billion times a month. Coworker turns search into answers and answers into action. And one of our trailblazers, Andrew Russo, you probably...
There's no news on Marvell, guys. I think the street's just selling the news on the guide. I think that's... I'm trying to see if there's a headline. I see no quotes or commentary from the CEO. Guide was increased substantially. I think the street's just selling it off. I mean, the stock was at 90 a month ago. Maybe it just became too much after hours, but as of now, I don't see a headline for why the stock's U-turning right now.
To see that. And I'll tell you, this quarter, we also announced Headless 360, again, making all of Salesforce accessible through our MCP clients, APIs, CLA prompts. Headless 360, bringing together the humans, agents, and headless platforms so you can use Salesforce with any coding agent across any surface. It's going to speed implementations, drive consumption, more actions, more workflow, more data, more intelligence, all compounding across Salesforce. We're meeting our customers where they are. Since launch in April, we've already processed 4.5 million MCP calls into our platform. Q1 alone, we processed nearly 1 trillion API calls. Incredible. And with Headless 360, Indeed is building and deploying Agentforce agents right from Cursor. And Just Eat Takeaway, one of the leading online food delivery platforms in Europe, we just had them speak to our entire management team. It's such an amazing story, is using Headless 360 already to bring agents into WhatsApp and other channels, engaging with 350,000 partners across 15 countries. So now let's talk about our favorite, Slack, which every AI company in the Bay Area here is using to run their business, including OpenAI and Anthropic, transforming our customers into agentic enterprise. Slack was nearly half of our million-plus wins this quarter, up 80% year over year. It is a rocket ship to the moon. All of the AI companies run on Slack. As I mentioned, I don't think there's a startup or next-gen AI company that doesn't run on Slack. Anthropic calls Slack its core operating system, and that's what Slack is becoming for every enterprise. All of our apps are Slack first, so now a service agent can summarize a case, update the record, escalate to a human right in Slack. And Slackbot is also an MCP client, so you can tell it to create a purchase order in NetSuite or update a project in Jira, and it happens, no switching tools. We've seen 1 million users of Slack MCP in the first 6 weeks, and Slack AWUs grew nearly 350% quarter over quarter. In 2 years, there'll be more agents using Slack than people. Every one of those agents needs the context and the data and the insights directly from Slack. Every workflow needs the data. Every action needs the integration, and every customer needs to see what's happening across the entire business. We have the largest collection of trusted CRM context ever assembled between Data 360, Informatica, MuleSoft, Tableau, manage and deliver all that context so that any agent can reason, act, and deliver real outcomes. Informatica has an amazing acquisition. It performed incredibly well this quarter. It's doing the heavy lifting and data management that every customer needs to move from pilot to production. All of this is why we're the #1 agentic CRM, and we provide what every company needs to become an agentic enterprise. Okay, so now let's keep going. And with Headless 360, the entire platform is accessible. We have some new people joining us at the table, so it's very exciting. Great to see you, buddy. And we're transforming, and more importantly, our customers are transforming too. Okay. All right. Anyway, here we are. Let's move on to what's really important. So welcome. Thank you for being here.
Thanks for having me.
We're thrilled that you're here. And would you just introduce yourself to everybody, because I don't think they know you.
I'm James Skank, President and CEO of PenFed Credit Union, headquartered in Tysons, Virginia.
And is this your first time in San Francisco?
Been here a few times. Meeting with Salesforce.
Usually I see you in DC. So happy that you're here with us and grateful that you're here. So why don't you tell us a little about, you've been using Salesforce a while at PenFed. You've had this vision of becoming an agentic enterprise. Why don't you tell us what's happening? We heard you a little bit on your earnings call.
Again, for those just joining, Nebius Leopold took a 5.6% position, 12 million shares. He was heavy in CoreWeave, heavy in Iren, heavy in Applied Digital, heavy in Cypher, never ended up buying Nebius, which was, so confusing given Nebius obviously has executed very, very strongly. He officially buys Nebius. I don't have his average on the price. I would imagine it's in the 180 to 200 range because this is a new position. 7% up for Nebius. Marvell, I don't have a single reason why Marvell is down outside of the street selling the news on the guide. Also, a Google engineer has just been charged with insider trading on Polymarket. I'll try to get some more updates on that headline in a bit as well.
What's the vision?
So about 2 years ago, I was actually at your world tour in New York City, and I saw some other partners, their vision of what they thought it can do for the member experience. When we're competing against 8,000 other firms, we got to deliver hyper-personalization, and every transaction, we do about 500 transactions a second, 160 million member transactions a year. They have to be right anywhere in the world, real time. So we built our entire platform over the last few years. We went from about 400 platforms down to literally 12 strategic partners. Our call center, our mobile, our web, and our branches all run on Salesforce. Every additional partner or tech siloed capability is a tax on innovation, it's a tax on speed, and it's a tax on security. So by building it around Salesforce, I really think it's taken me 25 years to realize Jim Collins's flywheel effect. We have 76 agents now running across operations, mortgages, IT, HR. All of our areas are adopting it to make our employees be more productive. We like to say they're bionic employees now. We're not losing employees. We're able to add more volume at scale, industrialized scale, with the same number of people. And we're very proud of that.
Well, you've heard the narrative on the SaaSpocalypse. Everybody's heard of this crazy thing that these AI apps are transforming, software, which it definitely is true. All of our products are just so much better because of it. But, how is it impacting how you're using Salesforce?
Let me just talk about how people make a buying decision, because I hear some of these stories.
Yeah.
When somebody knocks on your door, are you going to open the door and give them the keys to your safe or the code to your safe, to your family's jewels? So every day, a CEO of any firm is going to get 50 cold calls. Somebody can do it different or better. How is a decision really made? First of all, does the firm, in this case, Salesforce, have the product and service that we need? Second, do you have the engineers, the architects, the professionals to work with my team in order to bring that vision to reality? And then lastly, even if another firm had those first two, who is the firm standing behind it that can be there through good times and bad times that's going to stand behind that product or service? When you line up all three, that's where a good trusted partnership exists. That's why we went with Salesforce. So we worked with your team literally hand in hand. We said we want to streamline processes. We want to take out latency in the code. We want to do X, Y, or Z. Your team was there in the trenches at every level, engineers, architects, building out the vision. But then it's not just pie in the sky on a white sheet. It's implementable. We have 76 agents running side by side with our employees. A good example is in our call centers. We have Agent Wingman. I'm an aviator, so I think they named it because I like Wingman. Agent Wingman is going to save me nearly $1.6 million this year. It's decreased our call handle time 10% this year, 50% reduction in after call work times, and 40% reduction in held calls. So better experience for the member. Remember, they can go 8,000 other institutions. I want them to have a great experience each and every time with PenFed. It's got to be right each and every time. Yet I want my employees to do the knowledge work, building trust in the relationship, not entering what just happened on a phone call. We have agents that listen to the phone call, transcribe it. The human's still in the loop. They approve what was just talked about, but then it's 360 if the transaction occurred in the branch, web, mobile. So the next person that deals with that consumer, that member, they know exactly the relationship. They know what we might want to sell them next or what they need next for their daughter, their graduation. So it's creating a hyper-personalized omni-channel experience without having 400 people I need to meet with. I have 12 strategic partners that are allowing us to power the business.
And you've kind of alluded to this, but obviously thank you for your service as well. And just tell us about your members and how important they are to our country.
We've been serving those. We started out as the War Department Credit Union in 1935. We support the men and women who serve our nation across the national security community and all Americans who support them anywhere in the world. That's why it has to be right, correct, real-time industrial strength.
Dell just got a $10 billion defense deal to streamline software purchases, and Microsoft also gets a new enterprise contract for $9.7 billion from the Pentagon. So Microsoft and Dell with some big contracts after hours. I know Benioff's like interviewing his customers right here. Street doesn't care too much about it. Nebius up 8% on the Leopold stake, $225 for Nebius. Marvell flipping green again, up 1%. And then Snowflake still up 33% as well.
For the whole
Thank you for
country
having
and for everyone. Thank you so
Appreciate it.
much. Great to be with you.
Thank you.
All right. We're so happy to have James here. Thank you for coming to San Francisco. Unbelievable. To have him here is so great. And I think that that's such a critical message. And then we have another customer with us as well, UCLA Health, another great customer. They're using Agentforce to support 450 patients a day. I'm not going to go through all the details. Please welcome our good friends here, Pallavi and also Michael. So guys, welcome and thanks for coming on the show here with us.
Thanks, Mark.
Thanks for having us.
Well, why don't you tell us your story? You just heard James' story. Why don't we hear your story down at UCLA Health? I already told everyone to go to uclahealth.org and look at Agentforce. But can you tell us a little about what you're doing?
Sure. So,
okay, we'll go back to this when he's done interviewing people as if it's a podcast, dude. Goodness gracious, bro. Yes, the video stuff is good, but the entire format of this earnings call is just, it's cringe, bro. Like you're in an interview your customers on the call. Like what? Who does that? You don't interview your customers on that's like a sales pitch. No, you're trying to explain to investors what you did over the past 90 days, not interview your customers that are going to say really good things about you. Like it is so cringe. So we'll go back to when we get to Q&A. Marvell, that's up 1.8. And then Nebius, 7.9%. So a lot of people are asking, who is this Leo guy? Honestly, it doesn't matter if you know who he is. All you have to know is his track record. He was early to 3 really big names: Bloom Energy, SanDisk, and Intel. And we know what happened with those 3 names. I think he maybe had a little bit of Micron, but those were the 3 big names. And so, you know, when you get 3 of those big calls as correct as you have and you're managing institutional capital, the street's going to take your 13F very seriously, which is why T1 Energy has pumped over the past couple of days, went from about 7 to 10 based on him taking a 10 million share stake in this company. Iren has, not had a massive move, but he's been long Iren for a while. A lot of people have cited his conviction in Iren as a reason to be long the name. CoreWeave obviously has done well since he bought it, even if it hasn't had a crazy move, but he's been pretty convicted on that. Nebius is the one that I've always been confused about because, not only is Nebius the best performing stock out of the neoclouds, but one could argue they've executed the strongest, especially with the diversification of their business. So it's always weird that this guy who is, known for buying very high quality AI names didn't have Nebius. And it looks like now he does. So 12 million shares. Let's assume he bought it at 190. I mean, I don't know what the price is, but it has to be a price that it was at recently. That means it's a $2.2 billion stake. The fund is managing how much? 7-8 billion? So that's a decent chunk, right? That's a decent amount of the fund at that point, almost 10-15% of the fund that he would be owning. He did not always have Nebius. Nebius was never disclosed in his 13Fs. Today is the first day. I mean, that's why it's such a big deal, right? That's why the stock's pumping. Today's the first day we've seen. He has CleanSpark and Riot. That's correct. I think he also has Keel and Hut. So he has all of the Bitcoin miners turned neoclouds, but he never had Nebius, which has been one of the best neoclouds. His wife does work in Anthropic. That's also correct. He got fired from OpenAI a few years ago, and that's when he started his fund. So obviously the guy knew a decent chunk about AI to work at OpenAI, and then he just became an investor. So I'm really curious about his average and when he got this position. I mean, if he had this position in Q1, he would have had to disclose it a week ago. So maybe he didn't buy it in the past couple of days, but in the past couple of weeks, maybe he got in before earnings, and so he didn't have to disclose it because Q1 is ending March 31st. But because the position, I think, got big enough for him to disclose, that's why we got the disclosure today. So to be honest, if his average is in the 150s, 160s, then he is up a lot. And that is obviously very strong for all Nebius shareholders. So there you go. Leopold buys Nebius. I think a lot of people thought it was inevitable. It is officially happening. And that's why that stock is green as it's making this move up 7.2%. T1 Energy up a little bit. CoreWeave up 1.18. Iran, which had a massive day, that stock's down 1% right now after hours. Marvell, I didn't see any quotes from the CEO. All I have is the guide. And the guide we saw during the call was incredible. 16.5 billion for 2028, 11.5 billion for 2027, 40% year-over-year growth. I think it really just ended up being a sell the news right there. And that's why Marvell ended up going slightly red. NVIDIA also flat after hours. Okay, let's get back to Salesforce. Hopefully this interview podcast thingy is done soon.
Down and Agentforce has actually been great about sort of consolidating and chunking each of those. So whether it's what systems do we give Agentforce access to, what capabilities do we ask it to do for us? So next we're looking at potential integrations with MyChart. I think that's probably one that's relatively high on the list. But we also want to start having some assistance with our back office functions as well. So there's a couple of different things.
Well, I want to just thank both of you for being on the call. We're so thrilled to have you. We're thrilled to have you as a customer, and I hope you'll not only continue to drive us forward, but also inspire our other customers as well. And with that, I'm going to turn it over to Robin Washington.
Thanks a lot, Mark. Well, you've just heard the case for Salesforce as the #1 agentic CRM. The financials behind it tell the same story. So let me start with the drivers behind the numbers, why our growth is durable, and how we're funding it with operational.
Okay, we should just come back with Q&A, dude. The financials are going to be boring, to say the least. Wow, we got a new company in the S&P 500? Is this legit? We'll go back to when we get to Q&A. We'll go back to when we get to Q&A. This is FedEx Freight Holding Company set to join S&P 500. What the hell is FedEx Freight? I know FedEx, FDXF, that's a thing? Isn't that just FedEx? No, FedEx is FDX. What the hell is FDFX? It's going to be replacing EPAM systems. What the hell is EPAM systems? EPAM systems stock is down 50% this year. Yeah, that's my competition because of UPS. Yes, exactly. What is FDXF? I've never heard of a FedEx freight company, and the stock is not on the NASDAQ. Or is it FDXF? No, it's not. Well, it's in the S&P. Dave is going into the S&P 600, small caps, fintech. Dave. FedEx Freight Holding Company will replace EPAM systems in the S&P 500. Hold on. On Tuesday, June 2nd, FedEx is spinning off FedEx Freight Holding in a transaction expected to be completed June 1st. Post spin-off, the parent FedEx will remain in the S&P 500 and 100. Okay, so FedEx is doing a spin-off, and they're letting the spin-off also in the S&P 500 with the holding company or with the parent company. EPAM Systems is more representative of the small market cap space. That's why EPAM Systems is getting kicked out as per the S&P 500. Didn't they just include EPAM? When was EPAM included into the S&P? Jason, I'm sure you knew what EPAM was. No, they were included December 14th, 2021. Okay, so it's been a few years. This thing's getting kicked out. Did anyone know about this FedEx spinoff? This is the first time I'm hearing about it. But yeah, FDXF splitting off from FedEx. Okay, so that's your S&P 500 news. And then again, we talked about the Nebius update with Leopold. That's why that stock is up a lot after hours. I've never heard of EPAM, to be honest. EPAM Systems is an American company that specializes in software engineering services, digital platform engineering. 62,000 employees. Is this like a software consulting firm? Because consulting and software together, you could tell why the thing's down 50%. They do $4.5 billion of revenue per year. And that's what you got. I'm a FedEx employee, and yes, it's been in the works for months. Okay, well, we are officially seeing the market react to it. UPS down about 0.5% after hours. Is FedEx itself up after hours? FedEx is flat after hours. Kind of similar to Accenture, right? Yeah, that's what it feels like. Might be similar to Accenture here. MongoDB is up because of Snowflake. Is Snowflake having their call right now? Maybe we can go back to their call, get some insights of what they're saying. Then we'll go back to Salesforce. Snowflake call events. I don't have their events. Here it is. No, it's not on their website. Not seeing it here on their website yet. Snowflake still, again, massive move right here. 234 Dolores. We did have our boy, our TA boy, call this one out. This is a clip from literally yesterday, TT on Snowflake.
If this happens tomorrow, I'll tell you that if this happens tomorrow, it's a $220 stock. Is what's going to happen here. If
he was a little off, it's 235, but nonetheless, still called it. There you go. Snowflake right there. 35%, 234. That one's not giving up the pump. If anything, it's accelerating. Marvell has given the pump back multiple times, now up 2%. Snowflake's not giving back any of it. That was insider trading. Dude, you guys accused me of being an insider today with Reddit and Snowflake or Shopify. Now you're accusing Jason of being an insider. Jason might legit be an insider. Jason's worked at all these software companies before. He sold all their products for years. He probably has tons of industry connects that he can talk to. But more likely than not, he looked at the charts and the charts guided his inside knowledge. Dell, again, that's up on a $10 billion contract. Dell and Microsoft both getting a $10 billion contract after hours. Dell right there, 316. And then Microsoft, 415. So there you go. Did anyone take Snowflake as a trade? I don't know how many. I know most of you guys said Marvell and Salesforce. Obviously, Salesforce was not the bet. It was Snowflake. But in the chat, if you were in Snow at all, I think Jason bought a little bit of equity going into the print. I didn't have any of these three. But, you know, earnings are gambles. Zscaler, that thing fell 30% yesterday. Snowflake's up 30% today. So it's like sometimes, you know, you just don't know. You got to use your intuition, the charting, the TA, whatever you can do to come up with a reason for why it might go up or down. And then you got to live with the results. I took Marvell. I took Salesforce. Yeah, a few people here on Snowflake. All right, let's see if we can get back to this call and see. Okay, we're back to Q&A. Here we go. All right, let's get back to the call.
Please unmute yourself and begin to ask your question. Please limit to one question. Thank you. We will now pause a moment to assemble the queue. Your first question will come from Brent Thill with Jefferies. Please go ahead.
Good afternoon, Mark. I'm curious to get your thoughts on just the transformation to an AI-led story. The Agentforce numbers are great to see, but what else in terms of what you're most excited about? What are you seeing in the signals from the customer pipeline? In any other metrics that you're excited about that you can share with us that perhaps we can't see? Thank you.
Well, that's why I thought it's so important that we move to this video concept for the earnings call, and also that you get to hear directly from the customers. And I think we're trying to pick out a couple customers every quarter that can kind of, you know, I would say that they are kind of represent all of our customers in transformation. And I think that what's exciting is that the technology is really dramatically impacting how these customers are able to deliver their own results, which is why we even saw James, you know, bring this to his earnings call. So I'm going to say that what we're going to do is we're going to continue to make that happen. Now, let me just give you my personal perspective. We're using it ourselves more than ever before. I kind of mentioned in the quarter, you know, you see the service numbers. If you go to help.salesforce.com, that we've delivered more than 4 million autonomous service transactions, you know, in a relatively short order. It's kind of hard to believe. Even if you go to 1-800-NO-SOFTWARE and you press 2 and you get into the service queue and you bypass our sales organization, you'll notice it's all autonomous. You even kind of authenticate in autonomously. The Agentforce will work with you. And then if at some point Agentforce kind of says it can't answer your question, it goes and then brings a human in directly to help work with it in resolving your problem. Also in the quarter, you saw like we qualified huge numbers of leads autonomously. We've just really never been able to do that before. I think every customer is going to be doing that. You saw we also bought Qualified, and we have this kind of SDR sales agent kind of going outbound as well, helping, you know, to kind of understand our own business. We're modeling this for all of our customers so that they can do this as well. Or even in how I'm using Slack every day, I use Slackbot to kind of give me insights into my business to really look at everything that's happening with my core business. I can then get that insight. In every aspect of my business, agents are transforming how I operate my business. As you heard in UCLA Health or in PedFed, it's transforming their business. From a technology perspective, the biggest thing that happened in the quarter from my perspective was that Agentforce is now available and replaces essentially Salesforce Search. So for those of you who are Salesforce users, the millions of people who use Salesforce every day, the search bar is a critical part of how the application operates. Now, Agentforce is that search bar. So you can not only search and aggregate and get insights into information throughout every single app we have, but also create agents, and those agents can appear in Slack, in Microsoft Teams, in other applications, even in an app that's going to run directly on your phone called Salesforce Coworker. That is the biggest exciting technology, because that is going to be technology that you're not going to have to implement. You're not going to have to rebuild things. All of a sudden, this agentic technology is directly enhancing every single one of our applications, from our financial services cloud to our healthcare cloud, every app we have. So that's what's really exciting. And I just think that the speed of innovation and the speed of change is what's awesome. And then the rate of innovation, it far exceeds the ability for customer adoption. That's why bringing these customers in to help model for other customers what they can do is really mission critical right now.
With that, looks like we have Keith up for the next question. Keith?
Excellent. Thank you guys for having me on the call, and congratulations with all the momentum behind Agentforce and those AWUs accelerating in the quarter. I think the investor debate right now is about the timing and how that translates into strength for the broader business. And the question I wanted to ask was where you guys garner your confidence of a back half organic subscription revenue acceleration, because we haven't seen outperformance in CRPO for the last 2 quarters. This quarter was spot in line with your guidance. Last quarter was as well. And it feels like the bookings trends are lagging a little bit. Feels like Tableau is dragging on the business a little bit, Commerce Cloud dragging on the business. So can you help us put those two sides of the debate, like really strong KPIs from Agentforce, but the bookings not really looking to come through over the past 2 quarters, and how you sustain confidence in that back half acceleration?
Yeah, Keith, maybe I'll start with the question, have Miguel and others chime in as well. So you're right. Overall, I would say Q1 and our Q2 guide show very strong CRPO. It is a leading indicator for us, but also keep in mind, we raised our overall guidance for the year. And the 2 metrics that we've talked about going all the way back to October is the acceleration of net new AOV greater than AOV. We saw that in the last half of FY26, and we also are seeing it and have huge confidence in it for the first half of 27. What that will lead to is a re-acceleration of our core revenue growth in the second half of the year. And that's what I'd really ask you to kind of hone into. There's a lot of momentum that drives behind that. We've talked about our big deal motion. Miguel can talk about it more. Clearly, we've seen the success with Agentforce and Data 360. I'd say that over 50% of those bookings came from existing customers refilling the tank. So we're definitely seeing good usage. Our pipeline is very strong. We've also see an opportunity to expand our TAM. So I'll let Miguel maybe go into a little bit more details, but I think not only about CRPO, I think about our commitment and confidence relative to re-acceleration growth is really the driver of how we see our bookings going forward.
Yeah, maybe, thank you, Robin. Maybe to add a few other metrics under the hood a little bit. We feel very comfortable. Obviously, we like the headline numbers, but I also like in particular the strength of our core business. You alluded to the net new AOV acceleration. We're confident on the re-acceleration of our subscription and support business in constant currency, organically. But by the way, in the H2, we also have another business we acquired, which is Informatica. Informatica was a business that was growing single digit, both on bookings and revenue. In just 2 quarters, we have significantly re-accelerated that. The bookings of the chart beyond anybody's expectation, because data is king. Well, yes. My daughters told me that says data is queen because I have 3 daughters. But it's on the booking front, but on the revenue front, we've seen a huge acceleration. Now we are in last quarter and this quarter, we are obviously subject to the timing of some of the on-prem renewals, but we are in double-digit growth. So I like a lot of things about our core business, which is very important. You alluded to big deals. Oh my God, Mark, 98 deals above $1 million of net new AOV. In combination, the top 10 deals, focus on the top 10 deals. In combination, the whole booking, the annual incremental booking, grew 60%. When you look at the TCV, which goes in the RPO, we added approximately $800 million. That's 2.5 times the same 10 deals last year, the top 10 deals. 7, this is a beautiful statistic, 7 of the top 10 deals added seats, new seats.
That's right.
This is the new way that we have to monetize AI. We have 3 new ways, three ways, and then one more way that coming up, as you alluded to. The first one is we are upgrading the existing seats of our customers so that the same users, human users, can use unlimitedly AI. And this is the A1E that increased 60% in the quarter because there is a big uplift on those seats. Second, we are finding new pockets of seats that now with our transformed clouds, our clouds are not the same. We transform individually every one of our clouds. Our Sales Cloud, I've been using Sales Cloud for 15 years, is totally different. Now we have agentic BDR. I can talk to my Sales Cloud. I don't want to say this because Parker already said it. I log into my Sales Cloud less because I have access to so many ways to interrogate my Sales Cloud, Commerce Cloud, Marketing Cloud. Everything has been transformed. There is a big growth. So now the ROI of those clouds are higher. So there are pockets of users that before they couldn't afford buying us, now they're buying 7 of the top 10 deals included. And then the biggest way that we have to monetize AI is with customer-facing use cases, by selling flex credits, by putting fuel in the tank. 6 of the top 10 deals were ILAs, Unlimited Enterprise License Agreement, where we threw in a bunch of flex credits and customers are deploying use case after use case, channel after channel. They're going deterministic, they're going to voice. So I'm very confident on the reacceleration in H2. And we're very optimistic on the whole overall business.
And maybe the last thing I'd ask on CRPO, Keith, is remember it's also subject to renewal timing. And the more we get this flywheel growing and think about consumption, it's view as a leading indicator, and how it's going to change relative to our revenue is something that's developing over time. So I think we
necessarily
exactly
it just comes shorter sales cycles. And by the way, the last huge, and you put it like and there is one more thing to come. There is one more thing to come, which is the headless 360. We're going to bring our number one agentic CRM to every surface, meeting customers where they are. And we're going to work together with our customers and with our partners to find the right ways to, in a fair way, to monetize those new interactions and those new users that are accessing our platform.
So you've heard it straight from our CRO. We're very confident, right, relative to reacceleration of our bookings, and as well as our revenue for the second half of FY27.
Thank you, Keith. Gabriella, welcome. We'll take your question now.
Good afternoon. Thanks so much, Miguel. You teed me up perfectly on headless here. Mark and team, I would love to spend a little bit of time on your headless strategy, and more specifically, how it intersects with the build versus buy debate. On the one hand, Robin was talking about how it expands the opportunity in the surface area for Salesforce. On the other hand, talk to us about how you protect your downside from potentially enabling value abstraction out of Salesforce. Perhaps customers want to build things more in-house, or perhaps it enables competitors or value abstraction. So talk to us a little bit about your monetization strategy and how do you protect yourself to the downside? Thank you.
Well, you're right. Headless is probably the most exciting announcement of the quarter. And I'd love for Patrick to come in. And Patrick is our Chief Marketing Officer. Patrick Stokes is here. And Patrick, do you want to give us a little bit of an insight into our headless strategy?
Yeah, I'd love to. We were just backstage prepping for this, and we said, "What did we say about headless at the last earnings call?" And I realized we didn't. We were still getting ready to launch it at TDX. Right? Yeah. I mean, we hadn't even used the word yet, and now it's become such a key part of our strategy.
This is so bad, dude. This is just so. I don't know what to say about it, bro, but it's so bland. It's so cringe. It's so salesy. There's nothing real or authentic about this call.
So building out with Salesforce has now become easier than ever because we've seen these coding agents, Claude and Codex from OpenAI. As you use these things, what you realize is you need to be able to connect the underlying APIs, which you do through this layer that's called MCP. And if you can connect those into the coding agents, it makes it faster than ever to implement and deploy Salesforce. And I think we're seeing that show up in the numbers. Just this quarter alone, Agentforce customers in production grew by 50%. So I think we're starting to see a little bit of that impact as not just our customers, but also our global SIs across the entire platform. Absolutely. Implementing Data 360, implementing Agentforce, implementing a service, all of this, life sciences, all of this now becomes really just a conversation. So that's one end. But the other end is really what we heard from Miguel, which is this is really changing how people get value and consume Salesforce. in my experience, we're not seeing people take this capability and the coding agents, for example, and try to build all of this stuff themselves. What they want to do is they want to take this capability and they want to use Salesforce in different ways and get more value out of it. So rather than logging into this discrete application and this application and this application to get an answer to one question that might span multiple applications or multiple kind of sources of information, you can now just take these MCP servers and plug them into any tool that you want. They are inside our application, of course, with Agentforce Coworker, as Mark described, right up at that search bar. If you're a Slack customer, you can get to it right with Slackbot. That's really a headless experience as well. But if you want to plug these into ChatGPT and Claude, you can do that as well. And all of this just results in more and more value being pulled, being delivered to our customers from the Salesforce platform.
I would just add to that. I think even though we just announced it's been less than a month, correct? I think Salesforce historically has been very open, and we got more than 1 trillion API calls on our core platform just in this quarter. What we have seen is on a headless MCP tool calls have been more than 1.
All right. I think that's it for Salesforce. If anyone wants to listen to it, I'll put the link in the chat. You can keep listening to it. The video didn't fix anything, bro. The video just made us witness the cringe in person. That's what the video did. Other than that, the video wasn't helpful. Nabasis, 11.7%. Snowflake is at almost 40%. This is just under 52-week highs. It is like 30 cents away, or not 52, all-time highs for Nebius. Is this stock going to be 300 by the end of the year? I feel like this is the stock that has confused so many people. You either sold a bit too early, like myself, sold half my position way too early. You sold covered calls way too early. I remember at 130, 150, I asked a lot of people and, heavy trimming. I mean, I remember the day it hit 150. I was like, I'm not buying it, dude. It went from 80 to 150 that quickly. I think Tanner, Jose, all of us were just like, it's too much, too quick. This thing was ready to go to 200. Forget 150, which means if you bought 150, you bought into that strength, boom. And then if you're like, at 200, it's gonna chill. Nope, 235. I mean, it's unfreaking believable. I think this is a candidate for stock of the year. Obviously, Micron's up there, SanDisk is up there, but I think this is up there in terms of stock of the year. Like, it's not in the S&P 500. If it was, it would be one of the best performers of the S&P 500 this year. How much is it up this year? I think it's up 200%. Just the narrative and the retail, 130% this year, and the retail-based due diligence on this one. I think it puts it up there in top 5 stocks of 2026. I mean, we got to see how the rest of the year ends out, but Leopold's a big name, dude. And by the way, if he bought this after March 31st, he could have got this thing at $100, $120. I mean, he didn't have to buy it in the past couple of days. It probably just got big enough in the past couple of days where he had to disclose it. So maybe he bought some more recently, but his initial kind of core of the 12 million shares could have been bought 50% ago. And if that's the case, then, maybe this thing ends up getting a big move. So massive, massive win on Nebius right here for a lot of retail SanDisk, but also I think there was a lot of retail that either sold calls thinking there's no way this thing is going to get out of your hand, or just trimmed thinking this thing is run enough, which is theoretically the responsible thing to do. And this year has not been about being responsible. This year has been about levering up into the themes that are working and riding them to the sunset. You just have to be right on the name that you were in to lever up. Obviously, buying I ran into strength hasn't worked. When this thing pumped to 70 multiple times over the past couple of years, you bought into strength. It did not work. Nebius buying into strength really did work. CoreWeave kind of, lackluster. If you bought it at 130, 150, did not work. Has not just kept going up. But if you bought the dips, it has worked out. So Nebius has been one of those massive names this year. How can this guy pump a $52 billion market cap? Remember, he was very early on a few names. And, we were talking this morning about people using their audience as exit liquidity by pumping sub-billion-dollar companies. If you have, even if you have 10, 20,000 followers, you don't need to have hundreds of thousands of people listening to you. You could have a couple thousand that see your content and the market cap is sub 1 billion. You talk about it and, you know, a certain percentage of those buy it. I mean, that's easily enough of a way for this to pump. Nebius, yes, is 52 billion, but the level of awareness that Leopold has, given his fund is called situational awareness. That was such a bad joke. I didn't even know where I was going with that. But the point is, he has so much awareness with his fund, and he was so early on names that have literally 10 to 15x that if he buys a stock, you know, Wall Street is going to take it seriously. You might have retail take some random influencer seriously on X, on a sub-billion-dollar company. You're going to have Wall Street take a hedge fund that turned 200 million into 5 billion very seriously. And so I don't even think this is retail pumping it after hours. I think there's some funds that are like, okay, if Leo's in, that's our reason. Now, maybe it's a lot of retail as well. But the point is, there's a lot more people that care. And that influence is important. Barsville says, I won't have any FOMO on Nebius. I was never sold. I think if you aren't sold on the Nebius thesis, you're probably not sold on the broader NeoCloud thesis. That maybe you like CoreWeave better over Nebius because of the NVIDIA backing. But the point is, in terms of all the NeoClouds, also there was a big update on ClickHouse today, which they own 25% of. ClickHouse is now doing a lot of growth. ClickHouse just announced 250 million in ARR today. 4,000 customers. The company added more than 1,000 customers in Q1 since January and has tripled ARR year over year. So you've got this diversified model of companies that Nebius owns on the inference stack and the database stack. And that is another differentiating feature, you know, for the company. As Bitcoin continues to get dumped. Wow, are we about to lose 74,000? Crypto is a joke. I agree. I agree with you, Louis. This has been a joke. It's a sad joke, but it's absolutely been a freaking joke. It's kind of laughable, to be honest, the joke. There you go. All-time highs on Nebius, 235. 234.96. 4 more cents. We'll get 235, and that officially is all-time highs. But yeah, it's a sad joke because it's like, it's a raging bull and it's acting like it's, you know, a dead software company, which you would imagine with all this risk appetite, Bitcoin would not be treated like that. 235.37. There it is on Mr. Nabesis. Bitcoin just follows the 4-year halving cycle. It's going lower than coming back in November. If it were to come back in November, then you would have a lot of other stocks join the party as well that are associated with it. And maybe if we actually get a rate cut by Warsh, that's the perfect catalyst to help it join the party again as well. Who's actively buying Bitcoin right now? Who just doesn't care about its lack of performance and is just like, screw it, I'm buying it. Like, this is something that we'll look back on 10 years from now and be like, why didn't we buy more at 74,000? Put in the chat if you were buying more. Yeah, SaaS and crypto to zero at this point. Where's ETH? We haven't looked at that in a minute. ETH about to go below 2,000 as Bitcoin right there at 74.1. I still DCA daily. I mean, look, it's fun to make fun of Bitcoin when it's dead, but when it comes back, it usually comes back with a vengeance. I mean, we're talking about $7,000, $8,000 candles in a day. It's just, I think so much liquidity has gone into AI that hasn't been able to happen, and you need the rate cuts to really get more liquidity. But when it does come back, you know, people stop talking shit and they start looking at Michael Saylor like a genius. It's just, it's been a year and, you know, it hasn't really moved as much. Why is SanDisk down? Well, it did pump a lot today. It's down 1%. Actually, no, it was flat today, but I mean, it's up 4,000% in a year. Micron as well, slightly red after hours. Do we see Iren break out of top? You know, honestly, if Leopold is this convicted on the NeoClouds and he's bought this big of a stake in Iren or CoreWeave, or sorry, Nebius recently, why wouldn't Iren have that breakout as well? I mean, from the Nebius buy along with CoreWeave, Cypher, Keel. I mean, Keel is a small company, dude. And this guy has a lot of it. Like, it seems like he's just buying up anything he sees that is somewhat relatively decent quality and that has a potential to get a deal that could offer more compute. Like, it seems like that has been his strategy outside of the memory names and the energy names. And quite frankly, he might be doing that with T1 Energy now because it's not the highest quality company. But if there is a data center plan for that to move, is it crazy to see that one move from $10 to $20 eventually? Let me pull up his 13F. Let's see how much exactly he has in Keel. But he does have a decent chunk of it. And same thing with Iran. Okay, so for Iran, the guy has $400 million in it. He bought another 3 million shares last quarter. For Keel, he has 19 million shares. He bought 12 million shares last quarter, 38 million bucks. And then he has a lot of Iran, a lot of CoreWeave, and now Nebius. Yes, his wife does work at Anthropic as well. Which is like, I mean, that's got to be some of the biggest sources of alpha, right? Like, he never has to publicly acknowledge anything. He never has to say, oh, my, but, when they're home alone and she comes back from work and he's like, so, those data centers, huh? I imagine they're growing, aren't they? And so talk about inside alpha. I'm sure he probably can get some. Wow, look at Tanner's latest thumbnail, ladies and gentlemen. Look at this freaking thumbnail. I love his new thumbnail guy. Look at that. Look at that. I guarantee he didn't actually wear that suit. They put that suit on him via AI. I literally love his thumbnails, dude. Every time it pops up, I'm like, I gotta click. How do I not? Don't miss this. I can't miss this. I can't miss this, Tanner. I have to click on this. Absolutely have to. Amit, I have Nebius covered calls at 270 expiring June 18th. Should I be worried? I don't think 270 June 18th is an issue. But then again, so many people thought 170s, 160s, 150s wouldn't be an issue. It's been an issue. I mean, the stock has pulled a pound here from 2025. It's defied all odds, and every covered call got burned. Now, a year later, a lot of those covered calls on Palantir got saved. So I don't know if that happens next year with Nebius, but the point is right now, this is the hot stock. You don't want to sell covered calls on it. I would hope 270 is in 19 days doesn't get violated, but if it does, it is what it is. At that point, I think you got to be okay with selling some shares at 270. So next year, do we buy puts on Nebius? It's not that easy, right? Like, I'm using Palantir's decline this year as an example to simply highlight that one year you could be hot shit and everyone could be, so scared about their covered calls and all this stuff because it keeps going up and up and up. And then the next year, that can go away pretty quickly, like we've seen happen with Palantir and so many other names this year. It doesn't have to happen in Nebius next year, especially if this AI theme keeps going up. But the point is, like, if you're in it right now and it's working right now, then you kind of don't want to limit the potential for it working. If you have covered calls at 190 and you want to hold it for the next 5 years, but you don't want those shares to get called away, maybe next year you get an opportunity where it dips below 190 for whatever reason. If we get some 10, 15% pullback, which is inevitable across the market every year. And then, those covered calls get out of it. But if it goes to 300 and then it dips back to 250 and you have a 190 call, like, there's not going to be a chance to get out of it. So really, it's just a question now of how much they continue to execute. Dell, is that still moving after hours? Yup, 319. Should have known when Trump said it, dude. But even though Trump said to buy it, the Intel thing, yeah, we probably messed up. It was a $20 stock. We probably could have followed him and Jensen. At 260, when he said to buy it, it was a little tough to convince yourself, okay, I'm just going to tail Trump on this. Because it was already up 100% this year. So, yeah, it's up even more, which means don't beat yourself up if quantum goes, D-Wave goes to 50 and you didn't buy it, because at this point, Trump's in, the government's in. And so, maybe this is the next one to pull off the heavy move. Same thing with the rare earth names. But it was hard to buy Dell at 260, 270 after Trump pumped it. Because it was already up so much, right? So I don't think it's easy. Amit, what do you think about BM&R at these levels? BM&R, Robinhood, crypto, MicroStrategy, they're all in the same boat. Until crypto comes back, these assets are hit. That's why, you know, a lot of people ask me, have you been buying any of them? No, including Robinhood. And Robinhood, I think, is my greatest allocation to crypto. If I were to say, you know, what's my real crypto exposure? Because crypto's dead right now. There's just way, I mean, I like software even better than crypto right now, because at least you have some real fundamentals on software and you don't need rate cuts for software to go up. Like, you shouldn't need rate cuts for Reddit or Shopify or ServiceNow to do well. You just need market sentiment to change. And boy, did it change on freaking Snowflake. For crypto, you need legit sentiment to come back. And, you know, we talk about opportunity costs. I think that is actually an opportunity cost right now, because you just don't have a rate cut path that's likely until, you know, the Fed makes it kind of obvious that they're going to cut rates. And right now they haven't made that obvious at all. And then even if they do cut rates, imagine Bitcoin doesn't go up even into a rate cutting cycle. That would be very scary for the crypto ecosystem, no matter how bullish you are on tokenization and all these other different attributes towards it. And so, yeah, I think we're in a crypto winter. This is honestly the best time to buy crypto, because eventually we're going to be out of a crypto winter, but you have to believe we're going to be out of that crypto winter sooner than later. And, you know, by November, if that's when the cycle ends, I think September to November-ish is when people think it breaks out of the chokehold. Then, yeah, these crypto buys, the BM&R buys, hood buys are going to look really strong. But you have to be able to stomach the next couple months of it not doing anything. Nebius 239, folks. I think it has a date with 250. Crypto can't be a scam when Elon has 35,000 Bitcoin in Tesla. That's true. Oh, by the way, there's a really early SpaceX investor today. He gave a quote, and the exact quote was Peter Diamandis. He said, a SpaceX Tesla merger is inevitable. I think he said that to CNBC today. I forgot to mention it when we were looking at the earnings. So, you know, it's him, Chamath, Jay Cal. I mean, you got a lot of people, Elon himself talking about, you got a lot of people basically making this argument that SpaceX is going to merge with Tesla. And when that does happen, the opportunity cost of holding Tesla over the past couple of years might not be as big of an opportunity cost at that point. But the question is when. 15% now for Nabesis after hours. Rocket Lab still 150. What do you think about Elf and Celsius getting a bid? I think it was a sympathy bid, to be honest. Like Celsius, they had some insider buys, so I get it. Elf, I don't know why it was up so much, but I don't know. These are the names that are going to lead the summer if the AI theme continues to be hot. Same thing with Reddit and Shopify. Like, they had good moves today, but like I don't know if you could trust those moves if, you know, AI infrastructure continues to be the core theme. Even Meta today. I don't know if we can trust this 4% for Meta. All Zuck said is that they're going to have subscriptions. It's like, cool, but is that cooler than a lot of the AI infra that's going vertical? I don't know. So it's nice to see Meta get some love, but I think we need a few more weeks to see if it's sustainable. Microsoft right there, 415. That is still green after hours as well. Amit, I think the real mockery is going to come in July and August when Trump releases his trades and everyone sees that he's selling before pullbacks and buying gold dips. I mean, look, you've got a lot of people saying we're going to have a 15% drawdown. I don't know. I don't know if we easily get that. Would it be surprising though, right? Like, it wouldn't be surprising. Everything's pumped so much. But S&P down 15% from here, dude. That would put us where? That would put us at 6,300, 639. That would be March 30th lows. I just don't see that, bro. Like, it could happen. Anything's possible. But the March 30th lows after the earnings and CapEx guidance we've got, really? Like, maybe we go back to 7,000. Maybe we even hit 6,800, which would be December of 2025. But with this much momentum, you would need a real catalyst. Like, we would have to have such a blow off top across the entire market. And even then, you get a dip, I think people will still step in. So I don't know. I don't know if that happens. If Tesla and SpaceX merge, is going to be that big of a share price surge? Well, here's the thing. The question is, who's acquiring who? Is Tesla acquiring SpaceX? Is SpaceX acquiring Tesla? I would imagine it's SpaceX over Tesla. And then more importantly, what price are they acquiring them at? And then how many shares one-to-one on a proportional basis do Tesla shareholders get of this new entity? So it's still up in the air right now. No one obviously knows exactly what's going to happen, but the point is the fact that it could happen is what I think is getting the street to be more excited. Let's listen to the Applied Digital CEO. Speaking of all these AI neo clouds right here. Again, Nebius up based on Leopold's new 5.6% stake. APLD also has had a great run this year. The neo clouds continue to be where the street wants to position themselves for compute constraints.
Then we put the right people in place on the campuses, and this allows us to scale. Now, there is a limitation that starts to show up at some point. We're not there yet from a supply chain perspective. So from our MEP, our mechanical, our electrical, our plumbing. So we have to deal with that. But we've decided, or we've planned inside the company, that we can get to about 7, at least, of these campuses in flight at the same time. So we have 4 right now. We said we're marketing several others, but we think right now we can scale the business up to construct about 7 of these.
7 of them. I mean, you talk about marketing more than 1.7 gigawatts of additional capacity. So that certainly would argue for a 5th campus, I guess, fairly soon.
Hopefully fairly soon. We have those in flight. It's always hard to predict exactly when we'll sign these, but we think that we have, a 5th, a 6th, and kind of a 7th in flight. And that's where our limit is right now. And hopefully we can, maybe expand that in the future, but that's a significant amount of construction that we'll be doing across 7 campuses. What we can't do, what we don't do is these large, gigawatt within 2 years or 2.5 years on the same campus. You start to run out of, the economies of scale go up so far and then they collapse, and that's our opinion. So can we build 300 megawatts at a time across 7 campuses? Absolutely. Can we build a gigawatt at the same time on one? We think that's really hard.
How much connected power?
I mean, again, that's a lot of compute. This was a quote by the CRO of Nebius, by the way. We are seeing 4 or more customers competing for every GPU we bring online. As long as we are compute constrained, this is the revolution we are all experiencing together. And the stock market is reflecting that revolution by bidding up the names that are helping bring on these GPUs, where there's excess demand versus supply. Nebius did hit 240 after hours, 240.8, 239 right here, up 15% after hours. Wow, ServiceNow getting a 4% move in Salesforce can't. That is just kind of sad for Salesforce. That stock basically down 1% after hours, but Snowflake and Nebius, the real big stories after hours. Snowflake 35%. Nebius up 15%. How does Iran not make a massive move if there's this much? At this point, it would. I feel like when they announce the deal, this thing has to explode, and everyone's just curious if they can execute on the deal. But if there are that many constraints on compute to the point where there's 4 customers competing for every GPU, if you have the connected power and the capacity, all you need is the deal. And so I think at this point, when they announce one of those big hyperscaler deals, Iran probably gets re-rated, and maybe that's the best way to play it right now. Obviously, Nebius has continued to be the winner, buying into strength, but you would imagine the Keels of the world, the Irens, the Huts, the APLDs, they just continue to sign more and more deals. Even if you don't love the business model, the momentum on the deal signing and the capacity to bring more GPUs online is what the street cares about. Yeah, CoreWeave as well. CoreWeave year to date is decent, but it's nothing like Iran. Year to date, it's up 30%, which is incredible. Nebius is up 140%. And then Iran year to date is up 58. It's up a lot more from the lows, but it was at 42 in the beginning of the year. So after today, it's up a lot more. Amit, I think Trump will land one final blow on Iran in guise of the negotiations to achieve the element of surprise. I don't think so. I don't think he's going to strike them again. I think if he strikes them again hard, not some retaliatory attack, but a real civilian infrastructure attack on energy infrastructure, I think that would be devastating for the negotiations. I think that would make them lose a lot of trust. I think oil prices would spike to the moon. I don't think that's what we want to see. I know Trump's playing hardball with the sanctions today, but I don't think he's to that point where he's legit going to bomb. I think he likes that everything's going according to plan, even with the Strait of Hormuz still closed. And I do not think he wants to reaccelerate the war or inflation going into the end of the year. But who knows? I mean, we obviously got to get a lot more details on this broader negotiation. When NeoClouds, do you own only Iren and Nebius? Only Iren and Nebius. The one that I'm thinking of a little bit more is Keel. I did a little bit of DD over the weekend, not enough where I'd feel super excited about it. But to be honest, I think some of these names, you know, I was talking about this today with someone. Some of these names don't require that much thinking. You know, like I know people pride themselves on their due diligence and their thinking and their intellectualism. Some of this shit is like, bro, it's a $5 stock. Leopold's in it. They've yet to announce a big deal. You buy 1,000 shares and let it ride. I mean, quite frankly, I think there's a part of, now, some will say that's FOMO, 100%. But some could also say that's a way of playing the AI trade and sizing appropriately. I'm not saying to buy, 500,000 shares of Keel tomorrow, but 1,000 shares, $5,000 isn't going to kill anybody. And if this thing doubles, it's like, okay, cool, you made a big move. And you buy into that strength if they announce a really good deal. But that also means you don't have to go through every little nuance of some of these stocks that are in this theme, because they're in the theme, which makes them already a winner if they can execute. And if they have a little bit of execution, they get re-rated. Now the question becomes, how do you know if they're going to execute? Well, that's where you kind of look at some of the qualitative hints, and Leopold has gotten a lot of them right. Doesn't mean he's going to get everything right. But if he has a massive position in a company like this, he's not buying the stock at $2.50 to sell it at $5.50. So he probably thinks there's a lot more to go. And I think there's just some of these names where maybe you don't have to think so hard. Yeah, Wolf, Cypher, White Fiber, right? WYFI. This one's been a big winner this year, up 87%. I mean, a lot of these names, sometimes the thinking actually probably is a crutch more than it helps. Why not CoreWeave? I just, I think CoreWeave's great. I just never ended up buying it. Got Nebius at 97, got Iren at 43. I wish I had added a lot more to Nebius. But CoreWeave, I think when I was thinking of CoreWeave, it was like at around 120 when Nebius was at 97, 95. So, and then CoreWeave took off, then it crashed back down, and they do have a lot of debt. I don't love that. But then again, Nebius has their own issues. So I don't know. But I feel like if you're bullish AI, CoreWeave, honestly, there isn't really that big of a bear case to CoreWeave. Like if there's a bear case to CoreWeave, there's a bear case to all the NeoClouds, and there's a bear case to the AI compute constraint thesis. So maybe it is one to, again, buy a little bit of and just let it ride. APLD, honestly, just never looked at them that much. That one absolutely took off, but I never looked that deeper into Applied Digital. For those that are joining, again, the reason Nebius is up is because Leopold has taken a 12 million share stake in the company. And that is why that stock is green. Okay, I think that's it, guys. I think that is it. Marvell, great earnings, stock relatively flat, but massive increase on guidance, basically right after hours now. Nothing too crazy. CoreWeave up a little bit on this Nebius news. Nebius, again, big news after the bell with the Leopold stake. That's up. You have Snowflake, monster quarter, AWS partnership worth $6 billion. That's up 36%. ServiceNow pumping after the bell on Salesforce's earnings. Salesforce not pumping. And then you had Synopsys, which ended up being flat, but also a good earnings. And then HP, which had a rally, came back down, now down 1%, but also had a good earnings. And that is what we had for the day. All right. I think that's it. I'll be back tomorrow for the market open. Tomorrow is Thursday. Do we have anything big tomorrow? I don't think so. No, we have Costco, Dell, Okta, MongoDB, which is also up because of Snowflake, Gap, Ambarella, and UiPath. So we have those companies after hours tomorrow. We'll take a look at that. And we will keep going from there. Ultimately, S&P as well, basically flat on the day, but relatively strong given the momentum over the past couple of days. New basis points. Can I upload this? Is this ready? Yes, this is ready. Okay, so I didn't put timestamps on this yet because it just finished uploading it, but I will officially make it public right now. Told you guys we interviewed 2 CEOs last week. The first one was Mr. Noto. And the second one is, a lot of you guys guessed it, so a lot of you guys already know, is Mr. David Steinberg of Zeta. So there it is. I don't have the chapters yet in the description. It'll probably be up there in about 20 minutes. But there it is. We got Steinberg. We got Noto. Hopefully you guys enjoy it. Thought it was an interesting discussion. I learned a lot more about Zeta, marketing, the SaaS apocalypse, AI, first-party data, all that good stuff. So you guys can check it out. We'll link it right here. Steve and I's regular episode will be out Friday as usual. So that'll be out later this week. And for those interested, you can go take a watch to this one. All right. Thank you, everybody. Appreciate it. I'll be back tomorrow. We'll keep going from there. And yeah, look, it's a bull market. Even if you're not in all the big semi names, you got a Rocket Lab. You've got a Meta recovering today, Amazon making a move, Google obviously closing in on 400, your Snowflakes, your Datadogs, your Reddits, your Shopifys, your ServiceNows. You're starting to see some of those come back. SoFi breaking out from the 15s. Obviously, if you're heavy in the semis, doing very well. But even if you're not heavy in the semis, Tesla getting back up to the 440s. It was at 396 last week. You are seeing a lot more momentum in different sectors, and hopefully that can continue. It's a little scary with some of the extreme momentum, yeah, but that's also the nature of a bull market. And if oil can keep coming down, then that's going to be really important for inflation to come down as well. All right, that's it for me. Thank you, everybody. Appreciate it. I will see you guys tomorrow on the market open. We'll keep